time for the stream of the day. Ugh. Yep. No mambas, none. None no mambas. Hey Jason, how are you? Go Billy. The happy kid's here. I can start my day. Just give me a minute. I gotta share the link to the stream. Sometimes I forget to do that. It's not a huge deal, but I've been asked to do it more than a couple times. I think the reminder's nice. I gotta be honest with you. I really didn't expect to spend a whole lot of time they made a new webcast for earnings. Will be Wednesday, November 6th. That's a little later than expected. Interesting. Doesn't leave a whole lot of time. Wednesday, huh? Wednesday to Wednesday. November 6th. What was I saying? Oh yeah. So yesterday I spent some time charting, but I was doing it off after that video that I made. I really in that video just focused on I'll get to it, Jason. I'll try to get to it. Really in that video I just focused on the AMC stuff mostly. Talked a little bit about GME and IWM, but mostly in order to get to the point, I wanted to try to focus on AMC for that short video that I did. It really was designed just to be more of a recap. I haven't done and it really wasn't much. There wasn't a lot of heavy TA in it. It was more just me explaining my thoughts on what here's what I think could happen, so on and so forth. So, this is interesting. Where's the rest of the chart? There it is. Yeah, so like, on the whole, I had a pretty good day yesterday. I was trying to get some other stuff done. I still didn't really get everything done I wanted to get done. So it might be a little short today. But while I was doing the stream, I started looking over my shoulder at MPW, and I was thinking about how there was something I missed. I didn't do it on MPW, and it occurred to me that I should go back and check certain dates and certain things and see if they were lining up. And I got some crazy good stuff out of it. So I wanted to share some of that stuff with you today. It's not all specifically about MPW, although I did post like a really big blurb about it in my Book CTA channel on the Discord group. It's not just about MPW though. There were some things that I found that kind of shocked me, I guess. And it was a setup. It's a specific setup that has occurred in multiple stocks across the market. And it's not one that I guess is brand new, but it's there's something added to it that I didn't recognize before. So I'm kind of teasing that. I know I'm like teasing it a little bit, but basically, if this setup is a real setup, and I don't really know how else to qualify it, but it gives you like a future bear target and future bull target that are super accurate. So, all right, so this is a stock that's been enduring a lot of splits. I always kind of like take note of those kinds of things. Tan Tech Holdings. Couple splits. Maybe not the best, but it's going on for a while. So 2015, it looks like 2016, yeah, and then pretty massive kind of cat ear. So the cat ear itself is a upthrust, followed by some other form of upthrust later. And in this case, you could probably argue that this is actually the double upthrust back here. So this was an attempt to re-break. So it'd be better probably to describe it that way, like a cat ear, and then this is number one, and then this is like a valley, and then this is the second attempt, and then the failure. So when I talk about these things, sometimes I'll call it like a foretop, but the reason that that's the case is because there's almost always like an M shape, right? We talk about this all the time. And then there's an M shape down bottom, and then there's an M shape up top. And the reason to call it a foretop often is because, and other people have called it other things, that the extreme gains guy called it like a box top, tried to like coin it or something. But I had been talking about it since November of 2021, so I don't know. He doesn't really have like a case against me anyways for his complaints, if he has complaints. His folks used to complain at me a lot when they come on here. But he called it box top, and he's not wrong. Like, it's a very common pattern. And yeah, and it represents a lot of things. If you look at it just simply as a wave, it's fairly straightforward. You know, it doesn't have to be super complicated. So, like, calling it cat ears, calling it foretop, calling it a box top, whatever the heck you want to call it, it kind of can make it seem a little bit complex. It's not really that complex. It's really just a wave. And at the end of the day, what's happening is that it's attempting to break a resistance here early on. At least in this case, it's distributive. It's attempting to break a resistance early on that it had failed to hold back here. So it's a retest, and then they're going back one more time after trying to gain some steam. And what happens down low is very important, because what happens in the bottom is that there's also tests on bottom liquidity, you know, and there's a apparent weakness here, you know, where, and I don't visually see it like that strongly. I wouldn't argue that. I would say that it could have broken out here, but because it didn't, and then it just kind of hooks on that trend and comes down, you can see why that last push up ends up being so significant. It's really just a failure to advance, and you're losing the range, quite simply. So when you look at this, you know, we talk about things like cat ears or foretops or whatever. I hope that you guys don't think it's some kind of magic bullet. It's not like the pattern itself always represents one thing or the other. It can often represent distribution. That's the most common thing, but it really depends on what happens. And so I would run a guess through this that after that failure here, that this is going horizontal, but there's also like a developing wave. And so when you break it down through the lens of like a creek, as opposed to just, oh, it's just in a range, then you really see visually where that creek is. And then you see that when this breakdown happens, it goes right back to that creek. And ultimately, it's never recovered again. So I'm using this as like just a learning tool like anything else. I think that it's good to do that. So sometimes with creeks, one thing I like to do is just kind of copy paste them and see if it plays out like a channel. And it does. You can see that top right there pretty clearly played as a parallel, and then maybe the bottom also. Yeah, I'd say so. From the very beginning, the low in the beginning. So in some ways, yeah, this is a creek in the middle, but it's also just a system of channels being developed. So you're really in the midst of this. This looked like a long sideways action right here, but really what's happening is that you're developing like an action for a downtrend to begin. Now, from that point forward, I think this gets really jacked up, because what happens is that it does go down to meet that bottom, but then notice like immediately, probably because there was a split, and then it's immediately followed by another split. So like what I would say right here is that, do you see how this first one drops and it kind of holds the level? And then it goes to the second one, and then there's another split. I mean, right after the first. This is not far apart. And I don't know what's going on here exactly with these splits, but 1 to 24, 1 to 10, just trying to keep it over $1 or something. But the first one does look like it kind of holds the trend, but then notice that the second one immediately gaps down below. Like as soon as that split happens, it's going down. And so you would call this, if this were like a horizontal, you'd call that a sign of weakness. That, okay, like it did not hold this support here, and then it goes back up, and these then become what? Like distributive actions, right? So like then from this point forward, the goal is not to advance back to the top here. It's to distribute and see how low we can push it. And so that's what's been happening here. And I would suggest that all of that plays into maybe how you view this and like what you think what could happen here. So what's probably noteworthy is that it looks a little like that shallow S curve that we talk about. But I wanted to kind of quickly run through that, because I think that you have to take into consideration, like, all right, what's happened in this stock? And is it really holding any of those existing trends? The answer is no. So like, there's something else going on then, right? Like, where is it gone to? It must be something, I'm going to throw a guess out there, because there's only one other wave, and that's this early one right here. So it might be, maybe, yeah, looks early on, like it might be trying to adapt to a steeper trend, and that's assuming that that holds. Like I might say, like, sure, like that could be possibly where it's gone to, in which case you have to then take into consideration that, like, you know, okay, well, does that steeper trend exist elsewhere? It does right here. So they could use this as like a steeper trend instead of holding maybe the existing one that was there in the beginning. And this does follow through here as well. I see that bottom right there. So there's obviously like two competing channels. One is a lot steeper than the other. And the first one's kind of gone. So the second one looks like it might still be viable, like it's still a good one. So at this point, that all of that taken into consideration, you got a really high volume drop right here. There's a lot of high volume in that sell-off that occurred back to 35 cents. To me, it looks like a lot of people are trying to get out of their position, but it is holding higher lows. So it's kind of that's probably why you looked at it and thought maybe there's something good here, because it isn't exactly breaking down like it could be in a distributive fashion. So with all that considered, I do think this higher trend is important, but for now I'm going to kind of just leave it alone. And if you're just joining, you're probably looking at this thinking it's a mess, but I would look for some specific things on this break. So one thing that's concerning to me right now is the lack of real reaction from this top drop. So typically you're going to get a reactionary move once you get to the bottom that's going to equal this move. I think it has to do with establishing trends, not so much anything else, but also maybe because of this covering of those positions. We got this on AMC, though it did take some time. So yeah, the other thing is like, where would it go? And so a lot of times what typically happens is it comes back to one of these initial drop down levels. So here's my big concern about this before we kind of move on, and I'll cap it here. I don't know which one of these would be right because they kind of pad around 1-2 splits. Like each one comes after the next split. So I'm not really sure. I would suggest to you that on the one hand, where it currently sits at a bottom of like 12 cents looks pretty good for this top. So that would suggest to me that you don't need to go lower. But the other one, which is here at like 5, and this is really where we see a lot of that sell-off happen after the second one, suggests this thing go down to like 6 cents before maybe rebounding. So that this may not be over yet, is what I'm trying to say. It seems very possible that that could happen. So we'll see. I would suggest to you, you look up a Bukowski target for this wedge. It's probably pretty straightforward. Usually they are. And then see if there's a continuation for it. But I'm going to suggest to you that 6 cents is probably the low target, the lowest I would see it going right now. Based on this reaction that would be needed. Technically, you know, could they drop it down to like 3 or 4 cents and still get pretty close? Yeah, but I'm going to try to keep it fairly precise. I think it's, yeah, I don't know. Maybe that's the one. I'm going to say 5 cents instead. I think this could go as low as 5 cents before a bigger reaction. So if it breaks to the upside here, I would just use a Bukowski wedge target for that to the upside, and I wouldn't go much further. If it goes down to 5 cents, I'd suggest that, yeah, I mean, it could have a pretty huge reaction back to the upside. There are some issues, though, which is, I think, important, and that's really this yellow. I'll make it yellow. Well, let's make it a different color. I don't know what to make it. Let's just make it red. It's easier to see. This creek right here could cause some issues. So that could end up being like a halfway point for a move, but it also could be a place where you start ranging and you need time to break out of that range. Really don't know. Sometimes on these auto reactions, you come down and you just kind of immediately go back to the top. It's like super fast. And then sometimes that auto reaction can be kind of a multi-staged auto reaction, almost like a range build out that then goes up later, and both are fine. Like technically both could be possible, and like you don't really know. I do like trading auto reactions, if you guys haven't noticed. Like I'm a big fan of that setup, but it's hard to know if the auto how let's talk about timing. That's what I'm saying, is like really hard to know if the auto reaction is going to go all the way or if it's going to form a lower range. So in this case, I'm kind of looking at it again, just sort of eyeballing it. And I think there's a possibility that like 74 cent could be built out. So like long term, maybe this auto reaction only goes up to that far, and then it builds out a a stronger bottom, and it does come back up, but it takes a really long time, to come back up there. If this is a savable stock and it's not going to capitulate and go to zero or something, we have no idea what's going to happen. But yeah, that's what I would suggest to you. Right now, like $1 is an anchor point for this, as most of these are, these kind of penny stocks. So I don't see it as like a bad investment. I just don't see it as a broken out, ready to run investment. Like there's a little bit of caution that I would suggest because of this. It looks like a midway point to me on a potential drop. You see that? So like I think that they're setting up for, yeah, it looks pretty close. Like it could easily be like a halfway point where they're distributing above 20 cents here, which is that preliminary support coming down from that drop that they made. And that's a little worrying to me because you think it's kind of, you can see why, because it's basically targeting that low around 6 cents. It looks like 6 cents was right. 6 cents? The movie? But you know what I mean. But yeah, I mean, it seems right to me. So I would suggest to maybe wait and see what happens on this breakout. It's not a horrible setup later in the future. I mean, that could be a huge move, but right now I don't not really sure I would bank on that. And even worse than that could be like a lower range here that takes even longer, So like a real low range beneath 20 cents. So you just got to be really careful about those kinds of things. Yeah. AMC, please. Never. uh, I did AMC yesterday on a video about 30 minutes long, and I don't think there's much else to say. I'm not trying to shoot myself in the foot here. There's a lot I want to talk about today with what I learned about MPW yesterday in my off day here. And I think that a lot of people will tune out, but it's unfortunate because the things that I kind of found in relation to MPW and AMC are super profound. And I'm giddy about it almost. Like, I knew that there was something off in my brain. Like, I don't know what it was. There's something that really drew me to MPW early on. I don't know what exactly. Maybe it was like the super high short interest. Maybe it was the setup as it was going forward. Maybe it was the numbers being like oddly similar to AMC. I don't know what it was. There was something about it that I knew, like, there's obviously distress in the news about it, but there's so many problems with that distress that, like, the news itself is kind of twisting it. And it just seemed like this really strange stock to me. And I've been talking about it for months and months and months, probably to so much so that some people are just so sick of it. Because they're like, I don't give a crap about MPW. But I really think that MPW might be the next AMC. Like, I think it may have like 1,000% run in it coming up. And I know that's crazy talk. But if somebody were to go back in time, and I didn't get to participate in the earliest AMC run. I participated in the second one. And I had no idea what I was getting into. I've talked to you about this quite a bit. I got into AMC in like March, April of 2021. And I got in because I was looking to reinvest some money in the market and get back into the stock market. And I thought, I want to get into movies and cinema again. And I thought, well, movies should have good recovery. And I looked at AMC, and at least for me, like, I know you guys are like, well, you didn't see that giant move that happened. I did see it, but I really bought in thinking that it was just a good value and it was lagging behind the market in recovery. So I was like, oh, well, it looks like it could still recover more. And that's why I got in. And then I found out very quickly that it was tied to the GameStop saga that had happened. And I heard about that. Everybody did, in the news. But no, I wasn't like an early adopter of it. I didn't vouch for it. I didn't make millions of dollars or something on options. I was very much, coming off the bench to get into it while it was still hot. And I made a lot of money on the upside, most of which is gone now. Like a lot of people, it's kind of like you just held the whole time and nothing changed. It just came way, way down, right? But if someone were to take me back in time and suggest to me that this was going to happen, and I know that that's something that you can't do. It's a magical thinking kind of thing, right? You can't pretend that you have special knowledge and go back in time, all this crap, right? Like, that doesn't really help you be a better person to think about that kind of stuff. It just makes you kind of discontent, right? But I'm just saying, if I had that knowledge and I knew that something like that was possible, would I want to be in that play from the beginning and then out of that play when it hit the top? And the answer is yes. It's a super simple answer for me. A lot of people, maybe and myself included, were expecting that life-changing, we'll call it life-changing money, right? And it's a sad kind of narrative because for a lot of folks, it really would be life-changing money. And it's a sad thing because a lot of folks were disillusioned by people like me. Like right now, I'm sitting here on YouTube talking about stuff, and you're like, yeah, I remember listening to so-and-so on YouTube thinking that it was going to keep running and so on and so forth. It's like, yeah, itching ears, so to speak. were hurting. They were kind of desperate for change in their lives. That's common, right? And you're always going to have that group of folks that just wants to have that life-changing money. There's nothing inherently wrong with that. I'm just saying, unfortunately, this whole like saga pulled a lot of those people off the bench, and were like, yeah, I'm willing to risk it, in order to have this change. I'm not talking about the Lambo guys or the Wen Moon guys or the young people who just had extra money because of the COVID things. Like, I'm not talking about that. I'm talking about people that were legitimately like, yeah, I got screwed over in 2008, or, I've had like student loans my whole life, or I've got a family member with serious medical issues and all these other things. And I think that in retrospect, though a lot of those folks came to believe in what maybe the GameStop crowd was kind of preaching, a lot of the folks came to believe in that. In the Diamond Hands business bit, there's like two sides of that sword, right? There's the punishment side, and then there's the reward side. And the reward side and the punishment side are not always they're not mutually exclusive, but like they can be. And so there's a lot of people that they don't want the reward unless somebody's getting punished. I'm not preaching, I'm just talking about what's happened. And I think that the anthropologist in me is right about this, based on what we've seen in the last 3 years. There's a lot of people who, they don't really care. It's like equal parts, right? Like, they would like to have the reward of Lamborghinis and junk, but only if the hedge fund people get burned. So for them, it's like war, right? Like, we don't win unless the other side loses. That's win-lose. So for them, the idea of win-win is not viable. Like, it's not a real option. There's a lot of folks out there that are like that. They're like, well, I don't want them to win. They shouldn't get to win. They've been screwing people over forever. They should be burned to the ground and lose. And so they don't think of win-win as like a good thing. They think it has to be win-lose. Here's how we make it win-lose, right? And so those are the folks that kind of celebrate when hedge funds go out of business and so on and so forth. And they're really concerned with putting away, the Ken Griffins of the world and stuff like that. And those folks had, I think, a great deal of impact on a lot of people's psyche and like what we thought was important a few years ago. And then there's kind of like, you couple that with the desire to have that life-changing money. It's a very toxic, and I'm going to say toxic, I don't use that word very much, but it really is a toxic mix of, oh, I can punish these people. I don't even know these people, right? But I'm assuming that they're all greedy and whatever, because frankly, like, hey, they got bailouts and we didn't, right? Like, there's real legitimate reason to be upset, but like, they got the bailouts, but the government's the ones that gave the bailouts, right? It's like the government's the one that gave them the leverage. And then you look at like the nature of what they do as a hedge fund, and they're basically driving people's 401ks, and that's where the frustration comes from. It's like, well, they burned my parents' retirement plan to the ground, and I get it, okay? So I'm not sitting here saying you don't have a reason to be angry, but when you tie like anger and there's an enemy to not only that, but you can profit off of it and there could be a reward at the end, then you get this kind of concoction of volatility. And I don't mean like the stock market kind. And so early on, I think there was a lot more people willing to mix the two. But as time went on, I've seen personally that a lot of the people that gravitate towards my channel and just the general like TA, what they're really looking for is knowledge, that so they can transcend that mindset of win-lose and just get themselves to a winning position. They don't really care as much about the hedge fund losing so much as they do about, I just don't want to be in a position where I've got 70,000 something lost. I want to be in a position where my family is secure, and I don't really care as much, perhaps, about fighting the fight. And so there's that double-edged sword that's kind of lost its lost its edge on one side, and I don't think that's a bad thing. I think that's probably a good thing, because if you're able to kind of look at the market through the lens of it doesn't really care about what you care about. It's just an autonomous being, right? It's going to do its own thing, and you're along for the ride or you're not. Then it takes a lot of that emotion out of it. And again, I'm not sitting here telling you what to think. I'm really not. I'm suggesting to you that I believe that for those of you that are maybe like-minded in that way, and you've kind of come to the realization that, yeah, it would be nice if hedge funds didn't screw everybody over, but maybe that's not what I need right now. Like, I don't need to tie my financial future to that other side, right? Then looking at other stocks other than AMC isn't like, I don't know what it is about people. Whenever I switch over to like MPW, if I switch over to this stock right now, I'll lose viewers. People will stop listening. And it happens like all the time. And I lost a huge amount of viewership when I started talking about anything other than AMC over the last few months. And it's like, I'm not talking about AMC. I've done more TA on AMC than any other stock ever that I've looked at, ever. Like the history of stocks. I've never done more TA than I have on AMC. But at the end of the day, like, the setup's the setup, guys. Like, it's I can't make it go. And when we get to the point where you're waiting for that confirmation, guess what? If it doesn't confirm, it's not going. It's not that complicated. Like, the reason we know that this is confirmation is because of what it signifies on a larger level. You know, I think folks want that update because they want to be reassured that, and I don't mind doing that. You know, I think it's important to have a level head about it and to see what's going on. But on the bigger picture, I can't control what happens. And ultimately, like, we already knew that this week might be a bit of a dud if it starts going sideways and chopping towards this other level, because it can last till Monday. Do I like that? No. But every single time that we've had an opportunity to take an advancement on AMC, we haven't. So, like, until that changes, and we're starting to see, again, signs of life here, you know, but we're still at risk because we haven't made that confirmation yet. You're still at risk of turning back down. You're still at risk of not confirming, you know. There's no rule here that says this has to go up above, just because it jumped the creek back here, that it has to go up above 440. Like, both have to happen, right? You need to have a creek jump, and then you need to have that retest. You need to come back up and test the levels that you had. That's part of why coffee and methodology. So all we've done so far is we've kind of broken out of that first major trend, or that first major creek, which is great. But so far, we haven't had that second confirmation. And this has happened before. So this has happened multiple times before, where we've gotten this kind of early advancement, or it looks like it's going to try to advance, and then it drops. Now, one of the things that we're kind of missing, and we're doing this again right here, you guys are like, it's just flags, Booksy. Yeah, kind of. But one of the things that we're missing is we're not really seeing a major sign of weakness here, which is great, right? But is there a push-up with a potential for a secondary cat ear low that breaks that ice? Yeah. And that's not something that you should just ignore, but it's also something that you can't really control. So you're just waiting to see if it holds. You know, this is what happened last time. It pushed up, failed to advance, and then distributed back down. It was on the 13th of September. The last time this happened in a major way was back then. And it broke the ice, and then it was all the way back to the bottom, and then it just broke the bottom. So are you in a similar situation here where something like that could happen again? Yeah. What's the difference between that happening and the confirmation. I'll tell you what it is, and you're not going to like it. It's the operator being like, it's time to go. We don't need to go lower. And that makes it sound like you have no control, because you don't, right? We don't. We're observation. We're looking at, excuse me for clearing my throat a lot, but I guess I got some gunk. We're looking at what we can perceive as possibility, as probability, right? We already know that this thing has been pretty oversold. We already know that this could be a setup that leads to a decent turnaround. But we also know that this has happened before. Like, we've gotten those wave crosses to the upside multiple times. Like, it happened right here, in a similar way. It did jump a creek right here, right? Now, this had an obvious sign of weakness before it did that. It drove down to a new low, and then it jumped. This is a very similar situation, right? Where you have that wave cross that advances. Yeah, this is stronger, but the same thing happened like right afterwards. The same exact thing, basically. You had another one that kind of waved out, jumped over, and then it just continued to capitulate after that and just rode the outside of the trend down. I hate to say it, but that's kind of been the operative move here. Like, that's it. When we look at, like, what's the pattern, that's been the pattern since that change of character happened. You're like, yeah, that change of character, Booksy, that didn't help us at all. Well, it did and it didn't, right? It kind of put things into motion that were not going on before then, which is good. But at the same time, the path that it took wasn't the path that we would have preferred, right? And then when I talk about MPW today and a bunch of people tune it out, we're going to talk about what happened back here on the 13th. It's kind of mind-blowing, because the things that we were talking about maybe happening for AMC, they happened for MPW. And the setup did complete on MPW, did not complete, it didn't cross over here on AMC, but there's like no volume here, right? Either, which is really strange. And there's a lot of questions about that I have, but my point being is that, like, right now, what am I most concerned about? I'm most concerned about these tiny little gaps that were left behind on AMC at 423. I'm most concerned about whether or not it breaks this rising trend and what happens when it does. It can break it, but it can't go like significantly low, and then continue to break through levels. It's just going to do the same thing it did last time. It's going to head towards the bottom at 404 or whatever, and then try to dump it again. When you're looking at earnings being right around the corner, apparently on the 6th, is what I'm hearing. It presents itself as a kind of a negative situation, right? And so I had drawn out a couple scenarios, and it's basically playing into that right now. Why does it look like that, Booksy? Because why? How would you possibly know it could look like that? Because it happens all the time. You're getting 2 push-ups, and then you're backing up and trying to advance, right? And during that backup phase, the first push-up, call it like the paw. The second push-up, usually I call it like the cat ear, or the first cat ear. And then you usually have a secondary one. And this is the one that if it doesn't jump, it breaks down, right? So the simplest way to look at this is just to look at it in terms of, all right, creek jumps. What's something else that we learned? Well, we learned that sometimes that early creek jump isn't actually the cat ear. Like, sometimes that's just the first creek jump. That could be the case right now. Like, that could be the first jump. It's not the actual ear. What does that mean? It means that this could technically push up again, and that could actually be the ear. And you guys are like, well, that's confusing. Yeah, it is a little bit. It's annoying, but you have to just kind of count the waves and understand, like, that's a possibility. So we look at going into the end of the week. Is it totally possible this doesn't go anywhere? Yeah, it's annoying, but it's totally possible. And all of that's just to say that, like, I kind of already feel like with AMC, I've got a pretty good idea of where we need to look. And I don't think there's a whole lot of big questions in my head. If it makes another advancement, it's not good unless it breaks above 440 and holds it. If it doesn't break above 440, I don't particularly find it to be immediately bad or good, but I'm going to say that on the generality of it, I would say it's probability-wise more bad than good. So even if it advances again here and we come back down, I probably would say to you, yeah, this doesn't look good. That's what I'm going to say. If we come back tomorrow or whenever and it pushes up to like 440 again or near there, and then it comes back down and it just chills out again, I'm probably going to tell you, it doesn't look that good. Because at least for now, all we know is that it hasn't advanced yet. Now, is there a possibility that once that happens, that this pushes out and, does actually build out? Yeah, this has happened before. And this could be a possibility, but again, you're kind of waiting. So in the event that this does run, what's going to happen when it does finally run is very simple. You're going to finally have like those creek jumps that you need to have. You're just going to continue to advance, and you're definitely going to get back above 440. Okay? One way or the other. If on whether this is the ear or not the ear, right? If in any situation this kind of capitulates back down, then you're basically done for now. You have to kind of look at it through the lens of like simple trend support. Like it's not holding that trend. It's weak. There's not buyers pushing it up. It's weak. We've done nothing but kind of lose volume on this very low volume push. I'll say it again. I've said it before. LSPYs, which are bear flags, okay, they chop along the bottom of a range with low volume in like what looks to be like a bear flag. And then they dump and then they mark it down. Now, you might look at this and say, well, that's completely different than what your expectations were initially of this being a bullish range. It also doesn't make sense of things like, I don't know, the comparisons that you've made, right? Yes and no. And we're going to get to that in a little bit. And I'm going to talk about it when I talk about the comparison that I made 2020 AMC to MPW now. And you're going to be like, that doesn't make any sense. Why would one have anything to do with the other? I'll tell you why. Because they have the same major operators, BlackRock and Vanguard. Big money, huge money in MPW. 100 million shares, over 100 million shares between the two of them. Okay, and then they're growing positions apparently. We heard that BlackRock now has 7% ownership here. Vanguard's had a lot of ownership already. And I'm going to talk about their MO and what they did in 2020 and what they're doing right now, apparently, what I think they're doing in MPW and why that matters and why that might impact the current setup and the expectations that we have are pretty significant. So anyways, I digress. Point being, when you look at this and you think about setups, a lot of people are wanting me to always look at AMC, and I get it. I get the anxiety there, especially if you have a massive position. I will say this though, on the whole, as a technical charter, right? I don't find there to be a very compelling case that this goes to like 0. Okay? As a technical charter, I find a lot more compelling cases that this is eventually going to mark up to like $80. That's what I honestly believe. I don't necessarily think it stays there for very long. I don't necessarily think it goes to all-time highs like people think. But $80 for a lot of people is going to be fine. Like, that's going to be more than enough to get out. Heck, $13 to $20 is more than enough for a lot of people. If they really want to get out of this play, it's enough to get out. Do I think it's going to go there eventually? Yeah, I honestly do. So I may not think that it's going to rocket to $20 next, which is what a lot of folks think. And I may not think that it's going to go to all-time highs and go to $1,000 per share like some people think. No, but even as like a conservative voice in all of this craziness, I still think it could go really pretty far. Like that's still like a huge move. If you look at the percentage, it's the same percentage move basically that we made in 2020 to 2021. It's basically the same. So from my point of view, I'm like, I don't know what else people want, right? I can't guarantee that the hedge funds are going to be destroyed. That's not something I'm ever going to guarantee. I can't play into that narrative, right? I don't believe they will be destroyed. I just don't believe it. I think they're fine. I think they made a ton of money on AMC. I think they raked it in on all the derivatives and stuff. I think they lent out shares. It was the biggest moneymaker for lending out shares of any stock in the market in 2023. That's a huge deal. Okay. I have no doubt in my mind that they're going to be fine. And the fact that there's such large institutional ownership and interest in AMC right now just tells me that if and when it does run, guess what? They're going to be on board. They're going to be making money with you. It's going to be a win-win. And you guys are like, well, I don't want that. Well, then tough. Like, I don't know what to tell you. GME may be a very different story than AMC, okay? GME still has hedge funds that sit around and talk crap about it all the time and so on and so forth. That's not really what we're seeing on AMC. We're starting to see that lean go the other way. We're starting to see a lot of those ETFs buy in, take a piece of AMC for their portfolio. We're seeing a ton of long positions, huge amount of long positions for AMC appear in the 13F filings. If that bothers you, that's fine. It doesn't bother me because I don't particularly care if an institution's involved. They're going to be involved. They're going to have their hands in it. And ultimately, I kind of think they're the ones that are going to drive the price up. So when I look at this, like, I'm waiting for those confirmations because it tells me that the operator is ready to go. And until they're ready to go, I'm not really going to sweat it. And I'm going to kind of continually look towards what's the downside target. As much as I don't want to do that, we've done that before. When we first started coming down here and we broke below and we came to 440s and 430s, I made some adjusted targets and I said, I hate to say it, and I did. I said, I hate to say it, but if this comes down into election and earnings, it could be as low as 350 by then. And the weird thing about that was that the PNF offset, if you offset it and you drop that PNF target from where it was at 416 down to 350, it actually gave you that. Instead of giving you like that, the higher numbers, it gave you numbers that are much closer to. It's strange, I know, but it's a percentage thing. It gave you numbers that are closer to like 14, which is interesting. I mean, that's all you could say about it, right? Do I think it's possible that this could come down to 350 before it takes off? Yeah. I mean, look how close it is. What's stopping it? What's stopping it would be an operator saying we're not going there yet, right? And then the idea of it pumping and coming back down is also kind of scary. And we're going to talk about that in a minute because what we're experiencing right now on AMC doesn't feel exactly one-to-one with 2020. But I'm going to start making an argument, and I've made this argument before that I think it is like 2020. But I'm going to start making an argument that it's actually really, really similar to what we're seeing on a number of stocks in the market as they relate to the small caps. And I think it's pretty interesting because I was looking again at MPW a lot yesterday, and it just kind of occurred to me that I should do this comparison to the 2020 AMC, and I've been talking about it all morning. And when I started doing it, I started finding some really unsettling things. But some of it was like really unsettling. I was like, oh, holy crap, Other things were like, oh, wow, that's really interesting, And it's very, very similar. So going back in this huge circle, I just like blabbing on forever. But going back in this huge circle, for me personally, I don't know if AMC is ever going to be more than just a recovery for me. Like, the more I kind of think about it, yeah, you can trade this, but it's a difficult stock to trade in terms of swing trading. You get these massive swings here and there, but the options chain is not the best. Shares only kind of tends to be the way to go as long as it's trading like 50%. You guys are like, why not just trade options on it? Because they just die so quickly, and the options chain is just garbage after a little bit in a range. It tends to just die out, flatline, which is true of a lot of stocks. But I'm like sitting here like a sad little boy looking out the window in the rain, and I'm like, I can't play outside because a lot of my liquidity is tied up in AMC all the time. And it's like, if it were not tied up in AMC, I'd be trading other things, and I'd probably be doing just fine. And that's not what a lot of people want to hear. They just want to know, how do we get out of this AMC trade? I get it. I do. But I might be I don't know. This is such a difficult thing for me to say. But if I might be handing you a trade like the 2020 2021 AMC move, I might be handing you a trade like that when I talk about MPW. And it sounds super arrogant to say something like that, but I want to stress that that doesn't mean it doesn't go down again. And that's another scary thing about that trade, is that it looks like it could potentially go very low again, but that its setup is very, very similar to what happened to AMC in 2020, 2021. And that's an opportunity. You don't have to take it, and you don't have to believe it. And you shouldn't believe it in some ways. You should do your own due diligence and decide for yourself. But I digress. Let's talk quickly about GME, because a lot happened yesterday that we didn't see in that video that I talked about. So we came down to 2076, which was the level I thought we'd probably anchor on. To some degree we did. To me, it looks like we've pushed back up. It looks a little more like a hook to me, like it's not really sure if it's at a bottom yet. I don't necessarily think it matters that much, in terms of like a reaction back up and then come back down. It's not insulated. Like, you can't look at it just like this is the only range that exists, but it has done a lot to kind of spread itself across 2050. We made an argument a couple times that there seemed to be a desire for a long time to come back to 2050. It's a lot like AMC's 485 area for a while, where you're just kind of chopping along it. And that's what's been happening. We kind of made an effort to come down, distribute high on GME to come down and trade across 2050. And the more we spent time down here, the longer now we've spent time going sideways down here. Initially, there was very like touch and go, right? Now we're kind of going sideways in these lower regions, which tells me that the operators accomplished what they want to accomplish. Does that tick you off? Okay. I mean, there's nothing I can do about it. They've successfully driven out enough buyers, and they've brought in enough sellers, and you're like, no way, everybody's just buying, nobody's selling. Well, I doubt that. I think they're driving the price up repeatedly to get sellers, right? Some of it's mechanical, we know that. Some of it's not, legit. We know that, but it is what it is. Selling is selling, no matter how the selling happens. They're driving it up, and every time they're hitting this wall, they're driving it down again. They're getting to a place where now they can trade sideways again, where we initially pulled back to at $21. I think on the whole, it's been very successful. If you had lent out shares back here, you would have made a lot of money probably on people shorting this down and so on and so forth. And I think that a lot of that has to do with the scheme that's played on these ranges. And you're basically bringing it back down to that May 15th area again. And this is where we talked about this a little on AMC. The May 15th is where you have the most amount of 13F recorded filings for like buy-in. I think it has to do with, so you're about halfway through the quarter, but it's like, in March, there would have been a lot of shifts, because that Q2 is a really critical quarter for the ETFs and mutual funds to shift around their positions, because if stocks aren't performing well, by the time you hit that Q2, you're going to have a major shift. So it's just one of those things. So you get a lot of rotation. We saw that to a large degree in the IWM, which is the Russell 2K, and then it eventually kind of marks up from there later in the year. Q4 tends to be one of the stronger quarters, and so we're coming into that time again where you're kind of back to where you were. It's interesting, right? Because you took all that time through Q3 to just kind of move through those motions and then get back to kind of where you were. In this case, is it back to where it was in March? No, that's not what I'm saying. But if you look at where those filings are clustered around early May, mid-May, it's kind of like right in that same pocket that we're in right now. So I don't know if that matters to you, but it's a resetting in some ways of the position. And we've talked about this a few times, like it's also wrapping around like a really important trend support, or I should say a creek support, this yellow line coming down. there's the wedge, major wedge action. And so we had speculated based on some trajectories locally that it would come down to 2076, and it did. This was about, I don't know, it was a little while ago, maybe a week or two ago. We talked about it maybe coming down there because we were looking at these early trajectories. They were kind of pointing towards 2076. It came down later than expected, but it came down. It failed to advance here. Again, you get that kind of quadruple top, 1, 2, and then 3, 4, and then the hook, and then it drops. Now you're kind of risk of, all right, is this a spring? What is it, Booksy? I don't really know that I would call it a spring, because I don't think you can. I mean, you can kind of look at this and say, all right, it's an iteration of the previous one. Technically, it's an LPS if it holds here because it's higher than what was before. So it's just another point of support. It's like a higher support. That's an LPS. Last point of support is just a higher support. So you're making higher lows. There's some levels that we didn't really check. Weirdly, this August 5th, this has me very concerned because both AMC and IWM, which are, again, small caps, they both came back down to that August 5th level. And I'm pretty sure so did MPW, for that matter. I'd have to double check. But it seemed like that was marking like an ultimate bottom. That's not the case for GME, though, because GME had made these like higher lows throughout, and then it has yet to come back down, probably because, again, it's holding that support. I don't know if it's going to continue to hold that, but you have some catalyst events coming up that could definitely sway investors. And I think that those could be very critical to whether or not that holds. So I had a couple levels on hand. I'm just going to kind of keep it simple, though, and just we've summarized what's been going on GME. I don't necessarily think this is like super bullish right now. I think that it's very possible this is just a LSPY. And my bigger concern is that when it jumped this creek a while back, it left a pretty huge door open for downside. And then I'm not really positive it's going to go there, but I have that in the back of my mind that, like, all right, you know, this is the last place it really held support at 2050. If it drops again to check that kind of a creek, it's probably going to be here, not at the high. It's got quite a ways to go. I think it could come all the way back down to that bottom, and that would match up with that August 5th area. So I feel like there's a possibility, and I said this before just to clarify it, there's a possibility this drops through in kind of a head fake down, and that might actually be a more proper way of describing it as a spring. If this is a phase B section here and having that drop and then a massive reversal. It's a strange thing to try to call out because you're basically saying that you anticipate a trap. And it's also strange because a lot of people have already said vocally that they don't think that that's going to hold up. They think it's going to continue to drop from there. And I've said that, hey, I think it's going to go up before it comes down. So you're like, well, which is it, Booksy? It's both. I think I have a feeling, and I'm not positive about it, but I have a pretty strong feeling that they're going to use this as an opportunity, whatever the news is, to at least drive it down to like 1998 area if they can. If they can't do that, then 2050 is going to hold, and we don't even have to think about any of this, okay? But if it doesn't hold, I'm looking at 1998, and then ultimately I think they're going to try to do it. I think they're going to try to come back down towards that 1870. And if I had to just say, like, pick one option here, that's probably what I'd pick. Because I think this would benefit from a massive sell down in that they could shake off some of that on balance volume, drive the price down, and then basically at that point break back out in like a massive double flush and then continue back to the upside. And I know it sounds weird, but basically doing that in order to get high and distribute and then come back down again, which you're like, well, that stinks. But the way that GME has moved makes me think it's very possible that we see something similar to that. You know, we look at the past and it's like, in this time period here, you can see that drop down is pretty chill, right? Really relaxed back in April. And that's good. And you want that accumulation to be kind of relaxed on the bottom. ultimately what causes us to go is that push down and then that push back out and the recovery. And that's what we see oftentimes, like as the end of a downtrend, for example, where you get that push through. So you create a high here. In this case, there's like two that are made here and here. These are distribution levels. You push low. There's obviously like a cross that happens down bottom, but then the resulting action is a higher push. It breaks the resistance. This is really typical, really typical for a lot of people just call it like a W, but I look at it in terms of waveform. I think it's one of the most common bottom setups in the market, and it's the most obvious one in some ways. If you can push from a bottom low and then make a higher high, what you're doing is you're saying we're changing direction. It's super simple. You've been making lower highs, now you make a higher high. And not only that, but it subverts the last major drop. That's a big deal. The market's trying to turn, and usually it comes with a pretty big creek jump that's kind of obvious, right? In this case, back in this is what I don't understand about the Roaring Kitty garbage that you hear online, is people say that it's because he reappeared. And I'm like, well, what the F was all this then? That doesn't make any sense to me, because I'm like looking back at that, I'm like, yeah, where did that come from? That it was like not a technical breakout. Doesn't even make sense to me. Like, this is one of the most classic technical bottoms that the market has. And yet people were saying it was because of the return of Roaring Kitty, and I'm like, or derivative, or you know what I mean? Like, oh, it's all options change stuff. And I'm like, well, maybe, but that's not how I read the breakout. And ultimately I did buy in, but it was like, this was a bottom. And then immediately it comes back up and it does the same thing again. You see the iterative moves there. It's not complicated. There it is again on like a higher level, right here. And it's like, what exactly am I missing that this was not like a technical breakout? I don't get it. And then Roaring Kitty appears and everybody's like, oh, it's because of him it ran. And I'm like, what? Like, I didn't know he was coming, but it was a technical breakout before he showed up. You know what I mean? And then not only that, but this jumped like that major creek body. I was like, what? And the news actually was printing that garbage. They were saying, oh, it's because of him that it ran. And, and then other people come on like, no, it's because of OPEX and all this stuff. And I'm like, I guess. I mean, I think all of that stuff is sort of true. It's like not one or the other, but it's definitely not exclusive. Like, it wasn't just this or just that. It was absolutely like a technical setup. Like, legitimately, this is identical to the bottom on the big picture. I mean, it's the same exact thing. It made a higher push here, made a lower or a higher low here, and then it advanced back over the creek. And once that happened, it was like super simple. Like, all right, you should be buying in. It's like straightforward. That's the markup. You can even see it in the volume, like pump here and then pump here. I don't know. So for me, it was like, I look at stuff like that, I'm like, that's really straightforward. When I look at that, that's what I want to see now on GME. I want to see that similar kind of move out and change of direction. We're not getting that just yet. So until we get something like that, there's not really a whole lot that we can do except kind of wait. And it will be obvious, When I draw stuff like this, it's like, well, that doesn't look obvious to me, Well, it's obvious because once this happens and you push back above that 2172, then you're going to come back and you're going to make a higher low. And then guess what? You're going to do it again. You know what I mean? Like up higher. And that's what I'm talking about. Like, I'm making it specifically very wide so you can see it, but you get what I mean? Like, this should have a push above and then build out a support higher. And I think that this is a way to do that very adequately. Pushing below that support at 2050 and then doing like a 50-50 whip around would be a really efficient way to kind of check all the boxes here and get you that first turn, that change of direction on the stock. Thus far, we haven't had that. Like, it's done nothing of the sort. So higher lows are great, sure, but ultimately you're just in a wedge, and wedges can break either way. If you're continually making lower highs, it hasn't really changed direction, has it? And I don't think anyone would agree that it has. It's kind of just building up. So we're kind of waiting for that moment to occur. It hasn't occurred yet. I think it's going to occur simultaneously with everything else, if and when it does occur. And this is just my guess as to what I think happens. Other people are going to look at it and be like, well, I don't think it has to do that. Maybe it only has to go here. Maybe it breaks out early. In the end, doesn't matter. No. In the end, what matters is that it pushes and advances. It has to advance above this particular level at 2166. That's why I've got all these alerts right there. I've got alerts down low in case it does drop low. Everything else in here is just kind of noise to me, But yeah, I mean, sure, if it advanced and it pushed and made a higher high right now, just kind of subverted expectations on my part and went the other way and then just started advancing again, yeah, it's fine. Each one of those is going to be the same steps, though. You're going to be pushing out, pushing resistance, coming back down, making a higher support, and then advancing again. And those are the creek jumps, right? It's very straightforward, And until we see that kind of follow through, yes, we can talk about potential levels that it might go to. Like when we talked about 2076, that's a cool call out, Booksy, but ultimately it doesn't matter. No, like the thing is when by saying, oh, it could distribute here and come back down, it doesn't mean anything. It just tells you guys that, all right, I've got my finger on the pulse as best as I can, and we're doing okay, but it's not like that matters. Like in the end, aside from people maybe wanting to buy in or not buy in up here, and that's not my choice, that's your choice, it doesn't really do anything like for the overall setup. It just kind of moves back to a liquidity shelf, and then you're just sitting there waiting like you were before. We really got to see those bigger moves. So it's going to be a bit touch and go, and AMC is the same way. It's like, yeah, you could see it potentially come back down. It doesn't change a huge amount as long as it doesn't break super low. But at the end of the day, it's like until it starts pushing up and making those stronger confirmations by advancing. And that's what I was talking about in the video. Very first thing I think I mentioned was that it didn't really push any resistance. I don't know if you guys caught that, but that video I put out yesterday is like, it didn't really push any resistance. What I meant is that if you look at those levels that we're distributing from, like 450, the last couple levels here, one's at 441, and the other one is actually higher at 442, and that's like bare minimum. Those are the last two little levels right here before it dropped. That's all it pushed. It did not make like a significantly higher move. Do I think it jumped the creek? Sure. I'm not saying it didn't jump the creek. That'd be silly. It did. But at the end of the day, it didn't push resistance, and you have to have both. You need to jump the creek. You need to raise the resistance, raise the roof, right? And back up a bit, but not too far, and then do it again. Super straightforward. You guys are like, all you're talking about is a move up, Booksy. Yeah. That's not TA. TA is supposed to be predictive. Well, we do TA because we have, again, we talked about this before, we have footprints that tell us that, the animal is heading towards the water, and we're going to try to cut it off. But we don't always get it right. And so what we look for, aside from those footprints about like which direction could it go, where would it go if it went that direction, is then we look for those confirmations. And that's the part that, yeah, you don't need a huge amount of experience to understand. Like, you don't have to have a magic bullet or a special knowledge of this or that. That doesn't mean it's not TA. It's still TA. It's just very simple, straightforward. And sometimes that's the best thing. I've seen a lot of people waste a lot of money on short-term calls and stuff because they're jumping the gun and they're assuming that every big push-up, every 6% move is going to start some massive rally. And it's just not. Like, you have to have the move. You have to have the confirmation. It's got to be both, right? It's got to both push the resistance and then hold the support. Push the resistance, hold the support. And yes, there will come a time in a particular range, right, when the setup is good. There will be a time when, if that happens and it's coming out of a spring, for example, in a Wyckoff accumulation range, there will be a time where all of a sudden that goes from the bottom of the range to the top of the range into an SOS and then breaks out. And that's what happened in April. You know what I mean? Like, that's the kind of stuff that you really want to like keep an eye open for, right? And we're doing that. I'm telling you exactly what I think that should look like from my point of view, and it's this kind of setup right here. If you knew what to look for here and you saw that move up, the buy-in would have been at like 1224, and you would have been in really good shape from that way forward. It wasn't actually on the bottom. We could have anticipated maybe it was going to turn down here based on other things like divergence in RSI or whatever. You know, maybe there was an EMA cross in certain situations, the creek cross early on. But even then, like, once this jumped the creek, you have no idea, not really, until you see it push out. So it would have been a guess at the end of the day, you know, and that's the danger of trying to quote unquote catch a falling knife. Eventually, yeah, you could be right, but sometimes you're going to see that reaction and it's going to do what AMC's been doing, which is going to react, and it's not going to jump the creek. And then you're like, oh crap, you know, that's not what you want. And then it fails to advance. So I'm happy volume is super low. So I don't think that the low volume is a bad thing at all. But it's important to note that like low volume happens in different circumstances for different reasons. Inherently, low volume is not evil. It's not some like horrible thing. Neither is it inherently like always a good thing. Like I said earlier, a low volume bear flag is a bear flag. Most bear flags have low volume or lower volume. Volatility matters though. If it's high volatility with relatively lower volume, especially if it's diminishing volume, for example, that could be more signs of like distribution, just because it's just the nature of distribution to be more volatile. If it's a low volume and it's pretty relaxed and it's just jumping creeks gently and making its way back up, which is what's happening now, it's a bit more of a mixed bag. Could be potentially very bullish. You know, I don't see it as necessarily perfectly good or perfectly bad. You want to talk about low volume, MPW historically low volume. It hasn't had this low volume. Yesterday was like 2 million or 3 million volume, I think, end of the day. That volume on MPW hasn't happened since November of 2023. That's a really strange thing considering where it's at. It's not exactly at a particular place where you would think, oh, it's got to have low volume. There's an earnings report like today or tomorrow, and then that's it. That's the main reason. But like, there's been other earnings from the last year, you know. Why is this one all of a sudden historically low volume? So it's not just an AMC thing. If you're like, oh, volume's super low on AMC. Yeah, it's super low all over the place. And like I said, MPW just posted like at least a year. It might be more, but it was a record for at least a year because it was like, I went back in time. I found a 4 million volume in November on the daily. I could not find a single one that was higher or lower than that, you know, and it was like 2 or 3 million yesterday. So it's like crazy low. Does that inherently mean that it's good? No, it doesn't. But it is an interesting thing, you know, it's something to take note of. Volume is an indicator. It could just determine like, maybe it just represents uncertainty. People aren't really sure if they want to buy here or sell here. It's a good reason to not do anything. In other cases, it could mean maybe it's not about uncertainty, maybe it's about exhaustion or a satisfaction, for those that like that word better, of the range or the area. Once you trade an area to a certain degree, eventually the market kind of loses interest in it. People stop trading that area as much. They want something else. That's when markups and markdowns occur. So that's what kind of makes me pique my interest. When I saw the volume of the last couple of days, I was like, well, low volumes are usually a good sign if you're in the middle of a range, which is what happened with MPW, because at least it means you're going to move. You may not go the way you want, But typically, if you're just chilling out in the middle, which is kind of what happened to us here, right? And I remember saying it, and I kind of regret saying what I said, but I said, like, you guys really wanted volatility to come back. It's about to come back, and it did. Why? Because we ran out of, like, the volume just kind of exhausted itself here. There really was no way to move forward. I remember when they pushed down right here in August, I was like, yeah, there's no way they're going to move forward without some major flushes now, because you're getting to this point where those iterations, as we call them, the copy paste kind of motifs, were not working. Like, they weren't generating significant enough lows or highs or anything. It was like, as it goes forward, it would just die out flat. And that tells me that, like, if the pattern looks like it's flattening and there's, like, not going to go anywhere, that they're going to have to do something drastic to drive the price, which means they're going to go look for sellers or they're going to look for buyers. That's when volatility comes back. So, like, does that mean that we're going to have big volatility soon? Probably. Does that mean you're going to go up or down? I don't know. But I think that it means definitely, I mean, we already have evidence that it could go up. We have some reason to think that it could go down, but it depends on certain things, right? And then we're really just looking at the big picture. Like, it already jumped the creek, so we're in a good position to take off. We're just waiting for that confirmation. We just haven't got it yet, right? And until we get it, we're just waiting. But it does, to me, indicate that if the volume is exhausting like it is, it's probably going to have some pretty significant swings in order to get moving again. Someone else said, I think, on the Discord in relation to the video that I posted, that they were like, yeah, I agree. I don't think it's going to move. I think that the reason that the volume's being sucked out is because of, earnings and elections, and that it's not going to move until then. That's an alternative theory. It's a middle of the road theory. It's the do nothing approach, right? It's kind of like, if an operator is comfortable not doing anything and they don't think the price is going to change much, they might just let the market do what it wants to do, which is typically what happens, which is where, like, natural price discovery happens. It's super boring. It seems to happen a lot on GME as we watch it. I don't know why. I just see it all the time. You can kind of tell the volume just kind of is not there, and the price just kind of meanders for like a week at a time. To me, what that indicates is a very, like, light touch from big money. Like, they're just not really doing much with it. And so you're seeing almost like a natural price discovery. And I think that's important, because that is part of the institutional model, is that they will let it go at times to check liquidity and see what's going on in different areas, to see if the market wants to trade there. Some people think that that's all, like, market makers or whatever, some other conspiracy thing about this or that. I think it's just those big powers that be trading through those ranges. So I don't really find it to be a big deal. And it makes sense to me. If you have enough money to move the market around, you would push it to these different liquidity areas where you've accumulated shares at different times, or you want to accumulate more shares at different prices. You'd see what's being traded there. You'd see what kind of, it's like casting a net, right? To see what kind of fish, you catch, or trying different bait, different levels, right? It does make sense, but I would encourage you guys, if you're confused about low liquidity, why an institution would let go read about it. It's really interesting. So that's what I think is probably happening. Like, there might be some buy-in here. There might be some selling or covering of shorts, maybe for that buy-in. But, like, it's kind of a nothing burger, right? And the spring, as we see it, is like that. Like, if you look up the definition of a spring, it's very similar. You drive the price low in a really dramatic fashion. Sometimes, yeah, you have to drive the price up before you can come back down. We've said that before, because they're trying to enlist sellers for a bigger move. It's not impossible that that's what's happening now, But in the end, what does happen is that you get a pretty low volume. Like, the spring at first will have very high volume entering into the lows. It has usually a nasty, nasty, scary flush. It's designed to freak people out and entice them to sell. The reason for that is because they're trying to test the floor to see if there's sellers down there. If people are really eager to sell when it breaks the floor, that tells them that, yeah, this might be ripe for like a markdown, that more people are willing to sell than buy. That's a big deal. So you're constantly testing the top and the bottom of the range. But if they go down there and like no one's biting, you would expect it to be low volume. You would get some people selling off, and that shakes out the weak hands, as they say. But then typically it's like, okay, well, there's the liquidity check has done its thing, we're ready to move on, and they just leave. That's when you get the confirmation out and you take off. That's when the volume comes back in. So do I think this is a spring? It doesn't really look like one yet, although I do think we walked out above 424, which is good. In my opinion, that spring has more to do with that reaction back up and that test. I can't really tell for sure until then. But it is low volume is one of the signposts, But it has to successfully get back above. Like it's not by itself enough. So yeah, I don't think it's wrong to say that he's at the right place at the right time. Probably talking about Roaring Kitty. I don't think you're wrong to say that. And I don't have any issue with Roaring Kitty at all. Like the guy himself, what he's done and all that stuff, I don't really have a super strong opinion about it. Like I guess I do, but I think what I admire the most about him is his conviction in the play and his willingness to stick with it. Do I think that institutions would use that to their advantage? Yes. Do I think he's in on it or something? No. They use anything to their advantage. If they think there's news they can use to sell the stock, they're going to use it. You know what I mean? They want everything to appear organic when it's really not. Like, I don't know if they would have anticipated him coming back around, but all I can say is that the technical breakout was already there. So say whatever you want. And then ultimately, did the FOMO benefit retail or did it benefit institutions? Arguably, it benefited institutions who wanted to sell on that run up. So in the end, they used it for their own gain, right? So people that were buying in thinking it was about to go to all-time highs and MOAS and stuff because of Roaring Kitty coming back, they've been sorely disappointed. You see it in the video headers on these GME videos that come out every week. Over the last 6 months, they've gone from being like, opium level highs, and to just sort of like, oh, well, here we go, another week, and every chance we can, we're trying to like, oh, it's an OPEX week, or oh, it's this, or oh, it's that. It's like, maybe we're going to do it. It's like, well, the setup, once it's there, but it's not there yet. It's just been wedging for 6 months. Stinks. Has it had opportunities to jump? Yeah, and it hasn't taken them, and that's what's frustrating. But you look at that and you say, well, when it doesn't do that, you need to just be realistic. Like, it's not going yet. That's me anyways. I just want to be realistic about it. And when I see the distribution head top or whatever you want to call it, I'm like, all right, not yet. I've done everything in my power to try to be predictive, but at the end of the day, some of this is going to always be reactive. And there's nothing that's going to stop me from changing my mind when something is distributive. Like, I'm very open and honest about it on this channel anyways. This isn't me patting myself on the back. I'm just telling you, like, as a matter of ethics, I've been, just like everybody else, I've been excited about the possibility of certain moves, but then when they don't happen, you have to be very clear and you have to be very honest and straightforward and say, it's not looking good. When these things went into these cat ear formations and they failed to advance, I very flat out would say on the stream, it doesn't look good. It's not doing what it needs to do. When it drove the price up to 520 and it didn't hold, it doesn't look good. It can't break below 503 or else it's going to go really low. And that's what happened. Or it's going to go to the 470s, like it's literally what it was said. Because there's reasons that you would do that to drive below the range, right? Like anytime we get those potential moments, we want to be ready, but at the same time, you have to be prepared for this. That's what we're doing right now. We're talking about the exact same things. It's like, yes. Could it break out? Yes. Would this be the strong confirmation? Yes. Would we be happy if it finally happens? Yes. Is it ready? I don't know. Is it going to run up into earnings? Are we going to get an pre-earnings run? Maybe. Are we going to dive into earnings? I don't know. That's speculative to me. It really depends on this current setup right here, the way it's pinched in, and whether or not it drives the price back through this bottom. I think is going to be really critical. Very important. So I talked about the comparison between MPW and AMC, and I said that I think that MPW might be the next AMC move. And I think it requires some qualification because it sounds a little ridiculous. I did a huge amount of comparison, and I learned some things about the market that I didn't know before, which is always a good thing, right? One of those things that I've been noticing about that really kind of triggered this investigation yesterday was that you remember how on the 13th, when we were looking at AMC, so on the left side of the screen here, this is AMC from 2020. Okay, 2020 to 2021. This is MPW presently, all right, on the right side. One of the things that kind of triggered this investigation was, remember how on the 13th of September, the FOMC stuff happened. They decided to cut rates. What happened on AMC was a little bit of a letdown because on AMC we went up into this top and it didn't look great. And I kind of had suspected we'd drive the price down first anyways, because at least at this point, that's what had been happening. And I also thought, well, maybe we'll go down to that 440s area, or 460s area again, one of those two, to try to find a low and then bring ourselves back out. It made sense to me because when you get good news, the price is often already priced in. And then what you see is that the market is really reacting off of that and kind of taking advantage. So it's like selling the news. But it typically does that in order to kind of get that low accumulation if it really is good and it's intending it to drive the price back up. So you would get that kind of inverted move. Well, IWM is one that we follow quite a bit. And on IWM, it made the move, right, on the 13th. When we did the comparison, and it was a little while ago, maybe 3 weeks ago or something like that, 4 weeks ago, when we did the comparison to 2020 AMC and we compared it to itself, one thing that we noted was that the breakout that happened, and I'm going to go over here and I'm going to highlight this side over here, just the AMC side for a second. The breakout that happened on AMC, when this occurred, there were these two kind of opposing creeks. And we did this whole analysis on this. I can't redo that whole analysis, all right? I'm not going to do it. But basically, you have this uptrend that goes from the bottom to where that gap up is. And when you invert that, you get this opposite trend from the first peak. And it's essentially like a waveform trajectory, like wave one up, wave down. So up, down, same trajectory, same creek breakdowns. They're actually mirrored trajectories of each other, okay? In this case, I've got it slightly off, but when we did it on AMC, we did it 100% correct, right? And what we found, which was very interesting, what we found is when you mirror that trajectory, you get two things. So one, you're getting an equal and opposite reaction to the push up. So you're getting this push up that's trying to advance the stock towards some bullish end, right? And this is what we were saying about it. I'm just going to quickly run through this part because it needs to be said. Otherwise, you wouldn't understand the next part. You're getting this really bullish push back up. This is where it diverts from the market on the whole. And at that time, I think I probably did a lot more comparison early on with SPY, but MPW is the same here. When you look at what happens in August, late August, going into September, this is an election year. This is very similar to what we're experiencing now. 4 years later, I know it's crazy, but 4 years later in an election year. During this time period, all right, IWM and SPY go ahead and make the cross. And we've talked about this very frequently lately because we talk about that M shape and how like, oh, you make that cross up early and you jump the creek, then you just continue to advance. You don't go down. But if you don't make that cross early, then you're not going to advance. And ultimately, usually you capitulate, come back down. And that's where that equal parts wave reaction comes from. So that when you get to the next move down, basically you're just reacting and following the path back down to the bottom to re-explore, right, the liquidity down bottom, right? And typically, in this case, the setup was really clear. There was a gap that was filled going into earnings. This is interesting. This is where things get kind of crazy. So going into earnings, it drove the price down. It filled the gap that was left in April of 2020. So where it diverted up here, there was another reason for that diversion, which was a large liquidity gap that was left. Also, you have this massive auto reaction, a phase B top. Now you're going down and you're generating like a floor and you're going into a phase B bottom with a potential spring. And it does. It dips slightly below the low by like a penny or two, right, when it finally ends. What's fascinating about it is that during this first move, the election news does not send the stock flying. The election news just sends it up into like a rebound to check kind of that middle liquidity. And when you look back at what happened on this triangulation, I know I got these like arrows pointing around, maybe a little bit confusing. But when you look at what happened here, it actually went back and it checked that breakout level. It's not quite middle liquidity. It actually went all the way back and it checked that breakout level that happened on that first jump. And what's fascinating about that to me is that that is the move that ultimately pushed you up. Okay? It pushed you up into that phase B top. This is where the bulls were trying to like garner momentum to break out, right? So there was a key level here, and looking back on it, it says $26. All right? Guess what? When it reacts this time, it knocks down again. So here you have this kind of interesting like waveform jump right here, right? You see that key level is being met. When it breaks down, it goes into a low, and this is what I always call like the slingshot, because it's pushing away from what could be like the bullish trend, and it's pushing away from it in order to go get a spring. It's going for liquidity. Notice that when it starts running, look at where the major candle is. It's right off of that top. And it goes basically to like the 50% marker right up at the top. It's pretty fascinating, okay? Now, the rest of its history, we don't need to like talk too much about it. I think that the rest of this kind of makes sense. That 50% though is the 50% off of that middle marker that we were just talking about, that yellow line. Notice that the next time it goes up, so it's weird because when you look at this as a range, it does not appear to me anyways that that is the top. I've been looking at it like this for a while. Like this is the top right here at 41 now, okay? That's the peak, right? This is where it's pushing. Yes and no. If you look at where this is, it actually points back to this September 2019 top. And I think what we're really talking about is that same idea, like the same exact thing we just saw on GME on this bottom. It's essentially the exact same thing, right? Like this is essentially like 2020. I know you guys are like, that's not the same. But if you think about it in terms of like the push out and the backup, it's basically the same. And then this is January. And it's not going back to this early drop level. It's going way higher, going back to this like previous level higher up. Okay. We've already kind of gone through this a few different times. I don't want to like belay the point anymore. But I think that's really interesting because then like going forward, notice that like where it breaks out. So this is establishing like a 50% marker right here. That's then used later to this point where it's broken out. And it's like, it's bizarre because within this range, I don't think I would have necessarily seen that if you hadn't seen that reaction right here. I think previously I had been looking at this one way, which is that this is the middle. It's not a bad way to look at it. It's not like completely wrong, because technically, like, there is an idea that this is a center liquidity. I mean, it is, but you can see there's obviously a waveform that's anchored around it. But in the end, this is actually, this $26 marker is established here, I think, almost out of nowhere. It doesn't really make a lot of sense, right? Unless you're already looking at this as, this is really where that level dropped down from. And I frankly don't think I ever did that. I think I've always looked at it as it dropped off March 2020. Like, this is the level it dropped off from, not up here. Okay? Now, this is important because when you look at something like OBV, suddenly it's like, oh, whoa, that's weird. Now you guys are like, what's with OBV? On balance volume, why are you using that? This is a weekly chart, okay? When I look at the on balance volume and what happened on AMC, the on balance volume did not change much at all on the weekly. It actually stayed almost completely flat during this whole downtrend. So from the initial, like, big, this is a huge, like, LSPY bear flag kind of thing that happened on the bottom here, all the way down into that area on the 19th of August. Like, nothing really changed, which is kind of strange. The on balance volume does have these kind of massive swings. It looks like it's starting to widen out, like it could drop, but ultimately, like, it doesn't drop from March. Like, that's kind of like the last little hook breakdown, which is weird because, and you guys already know why, because you're like, well, COVID, nobody, you know what I mean? Like, it was almost like COVID seemed to come out of left field, but this was already going into this same model breakdown. And I find that to be really interesting because, not because I'm a conspiracy theorist and I think that they knew COVID was happening or something, but because then when I looked at MPW, I was like, what the heck? This is happening the same way, but without COVID. I don't think this model right here is it's because of COVID kind of setup. I think this is a universal setup, and we're going to talk about it a little bit more because there's something else that happens back here in this time frame that's really, really interesting, and it transcends AMC. And it's really bizarre to me to look at it now and be like, oh, what? I started noticing this a while back because I talked about these cat ears and what I perceived as, hey, they were already kind of pointing towards 72 on AMC. What the heck happened up top was just, I guess, a distribution with those double top cat ears, and then it worked its way down. And eventually it kind of came back up. Now, I've used this before to talk about and illustrate things like, okay, there's concepts there that we can use universally with waveform patterns in terms of pointing to future tops and stuff. But I think part of me just assumed that that anomaly was fairly exclusive to maybe some stocks, but not others, and that there really wasn't a lot of importance placed in specifically this little area until recently when we started noticing that, oh, that trend absolutely drives all the way back down to where we currently are, right? And we've been talking about this quite a bit. It goes into the same regions where we currently are, and that downtrend is being continued. Like, it was almost leveraged. It's as if they used a tiny little downtrend from like 2 months that happened in 2014 to drive the price of this entire stock, which is kind of strange, right? It's like, why would you use such a small area to do that? Okay, so we've done this kind of breakdown in the past. We've looked at it. I found that to be pretty interesting. So I was like thinking about how backing up a little bit, thinking about how in September on the 13th, IWM right here, right back here, when they announced the rate cuts, okay? Now, we don't know exactly how it's going to end up in the end. Maybe it won't be exactly what we think it's going to be, but what did happen is that it jumped the creek, period. So, like, what happened on the 13th, going into, like, you know, all that FOMC stuff, on the week of the 16th, you have this push out that goes above the creek. Why was that important? Because it reminded me of what happened on AMC right here, for one, okay, back in, well, actually it reminded me of two things. It reminded me of what happened in August of 2020, and then also what happened at the top when it didn't jump the creek. So both of those, it's kind of confusing. So it did jump like a minor creek here and try to advance. No doubt about that. Ultimately, it just looks like a wave breakdown because it kind of hooks up to the top. I digress. When you go back and you look at the same area in IWM from that same time period in 2020, we're talking about August, notice that back here in August and September, okay, of 2020, this is when AMC has its breakdown. All right, I'm not going to get rid of all this stuff that's on the chart because this chart's for a specific reason. This is the area where, while this is pushing up, what does happen is you get this interesting divergence. This happens on RSI, it happens on MACD, it happens on OBV. You also have a really long-term divergence from two specific points. And I'm going to have to kind of zoom out a little bit, but you basically get this massive divergence beginning on August of 2017, which is way back here. So these are going to be like some pretty critical marks that we make, and it doesn't change. This on balance, this MACD divergence doesn't change in the 2020 area. It actually continues all the way till the very end when it breaks out. So you're starting to see like the divergence in OBV doesn't really happen until the very end. This is going down ultimately. It seems really flat while this is going down, but then all of a sudden it drops, catches up. And then you get this like big reaction, right? An on balance volume that jumps the creek on balance volume, but the MACD had already been going there, as did the RSI. The RSI was also already going there, right? If you go back and you look at RSI on the weekly from 2017 to 2020, so again, another almost 4-year cycle, and arguably we could say it started maybe in 2016, but that it was up at a high. It really starts in 2017. You want to talk about like a 4-year cycle, but this is a massive divergence, huge. You went from, at least on this chart, $72 down to $10, right? It's a significant difference. And then that on RSI also continues, right, locally all the way through. And so there's a continuity here on the weekly that's hard to ignore for this setup, okay? I'm getting to it. I know you guys are like probably exhausted with this already. You're wondering where is this going? Well, it's important to see these because you can see why that setup was like highly volatile. Like it was already in a position where it looked like it was trying to advance on a massive divergence, right? And then it tried again to go down for lows, but it didn't ultimately break the divergence, right? That's the cool thing about it, is it actually just increased it by adding another one, which is on balance volume. And then you get this massive reaction and everybody's like, oh my gosh, came out of nowhere, right? Sure, but did it, right? Because in the end, these divergences are here and they've been there for a long time. Your operators are the same operators like BlackRocks and Vanguards that you have now, right, in the stock. And then when you go back and you look at it, the whole thing really builds out into an argument that it was already set up that way back in this distribution because it went back to these levels that were established in 2014 on these trends. And these trends were being built out, this distribution that was happening early on when the stock was supposedly healthy, right, before Adam Aaron like came in or whatever. People always blame him for things, but it's like this stock was already like in a distribution mode back in 2017 or whatever. It would already kind of come up, had a sign of weakness and come up again. Like it was going to go down, okay? And what's fascinating is that there's no way, there's one way or another, you would never have come down and not hit this marker, in my opinion, because that's essentially like the setup for the channel. Like it was already building out that way. And then weirdly, I don't know exactly how this works, but weirdly, this guy also predicts the future top. Now, you might say that's kind of a stretch, dude. You just kind of drew a line to the top. Not so. What I did is I drew a line from the beginning of that trend to this breakdown up here and specifically used the wave wrap right there in the middle, okay? I've done this before. This is where things start getting a little bit crazy because as I was going through this, I started to see this appear like in different places, and I was like, well, that's kind of odd, you know? Like, you don't necessarily see that every day. So what I started doing was looking at the market on the whole, and I was trying to determine, like, all right, really was focusing on MPW, and I'm going to get to that in just a second. But I started to look at that picture of, let me get rid of some of this stuff here. I started to look at that picture of like that early cat ear motion, right? And I was like, there's this weird motion that's going on. Let me see if it's on this one. I don't think it is. I think what I did is I have it on the other chart. Ooh, do I switch over? Actually, it might be right here on this chart. So what I did is I took that idea. I'm pretty sure it's this one, so let me just check. Then I don't have to redo anything. I took that same idea that, like, all right, there's an early signal, and then it goes into this particular kind of double top, and then drives the price down. And I took that idea and I drove it forward. And I mean, visually, this is kind of hurts my brain. But I did the same thing in 2016 on IWM. And I don't know exactly how to like, my brain, I'm like, how do I even qualify this, right? I'm not really sure there's a better way, and I can get rid of some of this noise just to help you like visually see it. I don't know if there's a better way to visualize this, but I did the same thing here. I took the same idea, right, and I drove it through the same ringer that I did on AMC. It's the same pattern where you get this early build out, and what happened is that this came above the previous top, and then like the first thing that happens is there's a downtrend established, and then it goes into a distributive mode. And then there it is right there. This is completely separate, right? This is this is IWM, which is the small cap, right, index. This is also going into COVID. So you're like, wait a minute, is it the same time period as AMC? Not really, because AMC went into a distributive mode, as we already talked about, starting in like 2017, late 2016, 2017. It was already going down. So you were kind of like, well, the comparison can't be one-to-one then. No, it can't. That's why that matters, because this is not the same time period. It's a different time frame. But what's incredible is it works all the same. So this initial time frame, it's set up this way. There's a drive towards a particular price, just like AMC. It's the same markup right here. Okay? It's driving it up towards some price. You're losing that momentum. You've got the breakdown here, the double top. You had a sign of weakness. And then look at where it goes. As soon as that March hits, it goes right back down to that level that was established early on. I don't say this lightly because this setup is very strange to me, but the visualization of that setup is super simple in some ways. It's like, yeah, you could kind of stretch it out and make it turn into some things that maybe it's not. I wouldn't advise you go too crazy on this, but I would say that looking at that setup just by itself, regardless of any preconceived notions about COVID or whatever happens there, checking out these two setups, they're essentially identical. Like, it's exact same setup. Exactly the same. This just took a lot longer. It starts in 2014. And you can see that walk down breaks down here. Right, and there it is. There's the drop, and it finally catches up to the bottom. But notice that the top specifically looks almost exactly the same as that IWM example I just showed you. Almost exactly the same. In fact, I'll go ahead and do a side-by-side with just those two, as long as it shows up over here. I think it will. It should. It's the same chart. so you can see it. Oh, maybe it won't. So let me ask you guys this. In your trading journey, if you will, right? When you see a distribution, do you assume that you know where it's going to go? Or are you looking for things like I look for, which is usually like still pretty accurate? I mean, like you can use this like downward motion right here on this creek jump and determine like, oh, it might go down there, and it did, and it interacts with that. But have any of you looked back, maybe you already do this, I don't know, and looked back at a trend from like a million years ago, right? When you first entered this range, which is basically like your preliminary supply zone. You see the volume right there. When it starts advancing, there's a preliminary supply, and then it builds itself back out. That's what this is into the top. This is the exact same setup. I mean, it's almost identical. It hurts my brain a little bit because I'm like, I don't know how it could be that similar, and yet it is. There are differences, there are key differences here, but in terms of like what's happening here, right, on this established setup, I'll make this orange so it matches, versus the top, right, what's being anticipated as this is the direction we're going to go, okay? And then look at the waveform breakdown, and including that with your sign of weakness, which both have. I mean, it's a phenomenal setup. Now, we may be able to sit here in retrospect and argue, well, maybe it never gets there. Maybe it only ever gets to like that point or this point if COVID doesn't happen. But I just illustrated to you a very important idea here on AMC, which is that it was already in a downward motion long before COVID. It had already broken down years before. And then even here locally, it had actually, there's more indication that the breakdown level is actually here. And that's what they use as an anchor point later, right, for the big run. That's actually where that breakdown point is, because that's where the range is. And it's not down here, you know, right before the entry. We're not right when COVID's happening or announced or whatever you guys want to say about that. It's back up in this area. The last time it touched the top of that trend, when it broke through that range, that's where it's actually at. I think it's really fascinating because I think all your indicators show that it was already in a breakdown mode. Like it was already going down. And it was about to have that big drop anyways. Like it's already in the motion to have a big drop, and then COVID happens. Kind of freaky, right? Same thing goes here. There's already a sign of weakness in 2018. This thing was running on fumes going into March of 2020. Look at the volume. Very strange, okay? Very strange. So I find that to be very compelling, right? And I'm looking at this, and I kind of started looking at it a little bit more carefully with these trends that are going up, and I'm like, what's going on with this thing? Like, this doesn't ultimately go beyond the top. This does. So it's not one-to-one, right? Like, it can't be one-to-one, right? Oh, it's not really one-to-one. There is another trend right here that is kind of met earlier on. You could do another one of these red lines. It's a little steeper. What's interesting, though, is look at where we are now. Look at where we are now. When I saw that, I was like, wait, what? Wait, what? Wait, what? I was like, what is happening with this? Why in the world would that particular trend still matter? You know, this is like way later, 7 years later, whatever. You know, it's like, what is going on, right? What am I missing here that I guess this would need to come back to this point at this particular time? This is a triangulation, is what it is. It's a waveform triangulation. But I don't think I would have used this creek necessarily unless I was just kind of hypothetically using like the creeks to determine like heights, which I do sometimes. You guys know that if you're on my channel a lot, you know I'll use stuff like this because it helps determine like, all right, where are you catching here versus not? This is like a wave breakdown. I mean, I'll do that stuff occasionally, but I don't know if I would have used this specifically. I just wouldn't have. I'm not saying there's not more than one. There's more than one. So I'm sitting here like kind of staring at this like, what the heck, you know? I'm doing this through the lens of like IWM. I'm doing this through the lens of AMC, and then through the lens of MPW. And I'm trying to kind of like wrap my brain around what's happening. And I'm like, well, this is what's interesting, is that in that moment back here in 2020, we get through all this stuff. There's some strange similarities in like the nature of like the move and like where they're going and then where they end up coming back to later. Like this is clearly the trend right here. This is clearly like the wave middle, right? This is where bulls were wanting to go before COVID, quote unquote, right? Although it does look very manufactured that this is some kind of massive double flush to get buy-in essentially and drive the price higher. It's what it looks like to me, because it seemed like there was a lot of weakness and it was already in distribution mode right here, as we just established. It's very strange. But that's the direction they wanted to go. And ultimately, like when you look at AMC, it's the same thing. Like this is kind of the direction that bulls wanted to go way back in 2016, and they hadn't had any opportunity to get there, and then they finally get there. And we get this kind of weird interaction down bottom where there's a push to go there early, just like was happening on IWM. It's no different. And this is where the comparison comes full circle to now, because we've been talking about this comparison to 2020, but we've been only comparing it to AMC itself and not really thinking about the implications that this had maybe on other stocks, or that this could have on other stocks. So like right here, this September is just a creek jump, and then it just continues to the upside. But on that September move, so basically by the time you get to November 9th, which is right there, I'm going to mark it off so you can see it. That's the election right here. By the time you get to November 9th, you get this massive push up, but it already jumped the creek. Like it did it right here. So there wasn't like a surprise, it's going to run kind of thing. In this case, it had already jumped the creek. Like it wasn't, I don't know if it could have mattered, like it would have mattered who was president or not. I'm not sure. We never really will know, right? But like it was already there. Like it had already made the jump in October. Okay? This is sort of similar to what's happening now in some ways, because in our current time frame, we're looking at it and we're like, has it already made the jump? Kind of already has, kind of hasn't. We're not sure. It looks a little like a rising wedge, like it could just drop, right? But we've been talking about how like it's in this weird setup right now, years later, where, I mean, yeah, technically it jumped a creek, could come back down lower. You know, there's a lot going on here because it did hop each of these, but it's compressing and volume's kind of dropping. We're not really sure. We could go on and on and on about that. We've already talked about that in recent days. So I'm not going to blab on about it. But it's a similar situation where this is like crossed up already. It looks like it's trying to maybe complete perhaps like a much larger S-curve movement right here. It may need to come back down. We've talked about 213 quite a bit. I think it could definitely come down to 212 before it advances again. I think it's a strong possibility that it hits 212, 213 before it goes up. But then eventually this comes back up and so on and so forth. You know, it's already kind of in that setup mode where it could happen, and it's got plenty of build out for it. Like it could definitely do it. It's not the only thing that can happen, but it could happen, right? What's weird is that currently, when we were doing that comparison, the 13th was the area that crossed. I would say coulda, shoulda, woulda, but could have happened. It's very similar to what happened back here in August, going into September the 13th in 2020. So right here, you have that breakout, but on AMC, it fails and it starts capitulating. And instead of the election causing the rally immediately, it actually rallies like momentarily after that earnings and then drives the price back low. And then it rallies after the fact. Weirdly, if you look at where all this happens, you know, it is like a run up that's happening late in the game. It's like an 80% of the move has already happened. This is something we've also found on MPW. Like 80% of the move is already done on MPW, or excuse me, on IWM, the Russell 2000. It's already finished. And at this time, I can't even remember what it was in. Maybe it wasn't in the Russell 2K. You know, maybe it wasn't because there's a Russell 1000, 2000, 3000. I mean, there's different sectors or whatever. But SPY is the same way. It's already kind of rallying. It's doing the same thing. AMC's like going the other way. Did the M cross and went down, wave back down. So it's pretty interesting because the same kind of motion in that slingshot, we were kind of expecting something similar now. So when we looked at the modern timeline of events, we were like, this was me like pushing buttons yesterday trying to find connections. It looks like a hot mess. We're actually sitting in right now we're sitting in the hot zone for a retracement level. We're at the golden pocket, by the way, at the moment, which is cool, down to 419. That's a thing. But that's fun. I mean, it's good to know that you could be in a really good place to recover right now, which is also great, hot zone. But in terms of like where would that have happened recently, it was like right there on the 9th. So it was like the same kind of concept of like, why didn't we're doing sort of a similar dance here where we haven't really made the motion. Maybe partially because IWM might need to drop again. That could be a thing. Instead of just rallying at elections, it needs to have like a dump first. I don't know. Maybe that's part of it. Maybe it's going to be down there by then. I'm not really sure. All I can say is that it seemed, even if that's the case, it seems like it still made the jump and it could be ready to go. And AMC did not. And that jump specifically was around here on that 13th, 16th period. And this is bizarre to me because this is where I would have expected, and we did the comparison. I know you guys are like kind of probably getting tired of me talking, but all of this stuff has to be said in order to understand why I'm like, oh, this is weird. We did that, remember we did the cross-section comparison, and we found that it was like 64 degrees, for example, and that's where it would have normally broken out. Like if you go back to 2020, I say normally, it's like the same area right here. It's in the same exact pocket. It matches like the same area in terms of even the level that it's on those parallels down. Like everything about it screams like that's where it could have broken out. But instead of breaking out here, it like barely pushes over and then it starts eking down right here. And so you get this big push up, you come back down, and where I was expecting there to be a phase B top, again, using the same criteria, which is bottom to gap, I use the exact same bottom to gap theory here, and it does work. You use bottom to like right where that gap is, and you do the reversal on it, it takes you to a place where that is the moment, and I'm kind of just putting it on here roughly right now, but we did it legitimately, and that's where it was. That's the moment that it does cross up, but then it just kind of meanders down the side of it. And I'm kind of like, again, eyeballing it a little bit because this is a weekly chart, and I don't have the other chart pulled up, but it is like right there. Okay, I hate to say trust me bro kind of stuff, but it's right there. It really is. So when we did it, it was like 1-to-1 until it hits this point, and then it doesn't advance. It just doesn't advance. Like right here in that previous model of, all right, if it was 1-to-1, where would it have gone? It would have advanced like to the top. It may not have come all the way up, but it was like measured out pretty evenly there as well, and then you'd come back down. And this is a lot of where I was getting a lot of that idea of like, oh, well, it goes up and comes back down. We're not there, are we? We're way down low. Like we didn't even bother. So we're in a really different spot going into elections, and we're in a really different spot going into earnings than we were in 2020 because there was no phase B top. Apparently, it didn't look like it pushed up. Now, I've been hypothesizing that maybe there's still going to be a phase B top, but the more I stare at it, the more I'm like, I don't know, man. Like it's come really low, and at this point, it doesn't look like the other one. The other one didn't break the ice, so to speak. The 2020 model didn't break the ice. It's just different. Like this back here doesn't come back below there. It just pushes up, comes back down, you know? And then it meets up at specific points, and we'll talk about that more in a minute. But like that's something that was really bothering me because I was like, it's not impossible that something's just different. And sometimes patterns don't play out 1-to-1. But to have it play so 1-to-1 up to a particular point and then to just kind of stop was really interesting. Maybe somebody watches my channel and they're like, yeah, this guy's on to us. We got it. I'm just kidding. That's not how it works. They don't care. But it's definitely something to think about. Like the same moment that this crossed up, this could have crossed up, did not. And that moment right there, I found to be very peculiar because enter MPW. And this is where I'm going to lose some people because some of y'all don't care about this. And you're like, I don't give a crap about this stock. I get it. But there's some stuff here that's kind of just like what we talked about before. There's some stuff here that's like really telling, okay? And if you're wondering like, how did I even make that connection between those top areas on AMC and the top areas that we just looked at on IWM, how did I make that connection? I made it through MPW. Because I realized that I had seen that somewhere. That did happen somewhere. I was like, well, you know, MPW did on the 13th move up, where AMC did not. And I thought that was very odd. And I went back and I looked at it and I thought, you know, there's got to be something else to that because I've never done that comparison between the two. And I definitely haven't looked at the 2020 build out to this build out on MPW that's currently happening. I hadn't done that comparison ever for AMC. And all I can say is this. When I went and did that build out, all of a sudden it was like, wait, what? Are you serious? Like, is this really happening? Is there really like that strong of a connection? And the answer is, yeah, there is. When you look at what happened here going into the 16th, right? Here's Monday the 16th right up here. And you look at what happened at that particular moment when on the 13th to the 16th, and AMC did not run, but it did jump over that line. Guess what? MPW did run and it did jump over the line. It did exactly like what we were saying AMC could have done when it could have done it. And then it did exactly what happened to AMC in 2020, which is it ran up and pushed to a new high and then it kind of came back down and started looking like it was going to crash. And I was like, wait a second. How interesting that that setup in and of itself had such a similar, let's just call it result to what I thought was going to happen on AMC because we were doing a comparison to 2020. And again, what I did is I went backwards. The numbers don't look perfect here, but they're right. One is 50, one is 50, okay? I'm not sure exactly why they're a little off. It might have been because I messed with something on the daily or something, but they're there, okay? I did the same comparison, and I looked at the setup as it stands on MPW versus the setup as it stands on AMC. Before I go any further, okay, I know that a lot of people clock out when they hear me say anything other than AMC. But what I'm about to show you is that there's a very strong comparison between what's happening right here on MPW. It's not one-to-one, but it is very, 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 very strong comparison to what's happening here on MPW versus what happened here in 2020, 2021 on AMC versus what we saw in that March build-out on that big drop, March 2020, into what happened on IWM. There's a strong similarity in that same exact setup, okay? And I'm going to illustrate that as quickly as I can. I know I've talked a lot already about this, but I was showing that there's a pattern that's building out that starts with a distribution that builds from a distribution to a bottom, and then that takes that bottom and it drives it back to a top. Okay, and that's going all the way back on AMC to an early distribution that started in 2017. When I looked at MPW, the COVID drop in MPW is actually almost benign. It almost doesn't look like it matters because in some ways it kind of recovers right away. Interestingly, right, this is, if you were comparing it to, let's say IWM, the Russell 2K, you would see this and think that maybe it was supposed to cross up here, like, oh, it could have crossed up. And then just like, you know, again, this is October. This is way later, actually. This is already like 2022. It would have had to cross up like way back here. I mean, it's so far away. It's very strange, okay? If you try to do the comparison, it almost doesn't make sense because you're like, well, this just sort of takes forever and it goes sideways. And again, looking at where we could have broken out in August 2020 right here, you would have to say that it would have been this period, right? Where you would just say, oh, it's going to come back up and break out. And then this would have been where it broke out. Like, again, if it had followed the IWM path, it would have looked like that. It didn't follow either of those. It didn't follow AMC, didn't follow IWM. It kind of like meanders for a while and then it stays flat and it forms this big weird top. Mysterious, right? Yes and no. This top is the same top that we were just talking about, from way back when, right? It's the same exact kind of similar setup to what we see on AMC, to what we saw on IWM, and what we now see on MPW. There's a established middle. It goes into a really strong sign of weakness, pushes back up, and distributes. It's classic kind of cat ear looking thing. It's basically identical to what we see. I just showed you guys two examples of this, one on AMC, one on the Russell 2000. This is like bizarre because COVID falls like right in the middle of it. So unlike the other two where COVID is kind of like the tail end, it's where you get to that end result. This kind of does that, but it does it in like a weird roundabout long-term pattern way. At that point, I'm like looking at this like, okay, well, there's obviously some similarities here. It did come back down to a certain level that was established early on, but then it builds out like this way larger distribution, right? But then notice where it comes down to later is that same level again. So it's like it does the same thing. It just takes way longer and it's years later. It's almost like a whole cycle behind, right? Now you're probably looking at these two like, wow, they look pretty similar, but that doesn't mean much. No, it doesn't mean a whole lot on the surface. Like just because something looks really similar doesn't mean it has to be the same. I think we all know this, okay? But I started to investigate different parts of it, right? That's what you should do if you're trying to make a comparison. So we look at something like RSI or, that's not RSI, that's volatility. You look at something like RSI and you're like, well, there has to be a similarity there, right? In order for this to have a comparison. Guess what? So both of these stocks were primarily driven by Vanguard and BlackRock, okay? They both have really negative news cycles going into these bottoms here for different reasons. Both were relatively undervalued, arguably, at these times where these bottoms were happening. Now, what's interesting about MPW in that regard is that it's had very negative news, but the negative news was surrounding a particular tenant that they said apparently lost them. The market seems to think that they should have lost like $12 billion in overhead value. But in reality, what was found was that they really only lost like $2 billion because of this bad tenant. That's like a $10 billion value overreach. So this lost $10 billion more than it technically should have from a value standpoint. Not only that, but it has massively high short interest, right? It's on this hugely historic bottom area that it hasn't been in. So either this thing's about to just die, right? Or this massive drop right here is going to rebound. And when it does, it's going to correct value at least back to 10 and possibly, according to the trend, go back up to 18 to 20 bucks. But the negative news surrounding it is just horrendous. It's like they can't do anything right. But they've been cleared of all this stuff. They've already fixed that problem. It's probably going to be nothing burger going forward anymore with that tenant gone. They've diversified better, all this other stuff, right? And yet they're in this position where they've been going down for years. And then this is what I found very interesting, okay, is that you look at the narrative behind it, and it's the same kind of thing that was going on with AMC in 2017. There's a massive drop, right, in a lot of things, on balance volume, et cetera, et cetera, et cetera. And then it just slowly capitulates and follows its way back down. Notice the multiple year-long divergence. So this goes from 2022 to 2024. Notice that it starts at the exact same place, that breakdown off that key level right here, and that's where the ultimate low RSI is on the weekly. This is not like a small term thing. This is on the weekly. It's one of the higher time frames that most traders would trade. As the price is driving down to these lows, you do get a pretty decent influx of volume, but it's more than that. You're also getting a years-long divergence, much like what you see on AMC. Now, the walk down itself, is fairly methodical, and it has some similarities. Like there's LPS, LSPYs, just your bear flags, things like that. Sure, we could like walk through that and say, oh, it's a fractal similarity. I don't think that it's a fractal-based play, though. I think that when you look at it, you got to look at consideration of what's going on here. And if I've made all of this very clear to you, and like you're just like wanting to clock out now, I don't know what I've done wrong. But every time I talk about this, people are like, I'm not interested. It's not about AMC. Okay, fine. But you have to understand that, like, I don't care. Like, if I can make $500,000 trading something, I'm going to try to make $500,000 trading something. I'm not saying I'm going to make $500,000 trading this. But I really hope you bear with me, because I spent like an hour setting it up. And I really hope you guys are willing to sit through the next like 5-10 minutes and just look at the comparison between the two and tell me what you see. Because right now what I see is that there's a really strong similarity in how these approach the bottom and the setup. I have a really, really good idea that this particular setup can have a reaction that comes back up to the top at a later time. So what I did is I did a simple mathematical, straightforward, like proportional comparison. I used the same kind of techniques to drive these kind of angular trajectories. And just like what I was expecting to have happen on AMC, this actually did play into that. And it did drive into, which is kind of amazing to me, and it did drive into that upward push into a phase B top. Now, timing wise, this is where things get really fascinating on my part, because I'm looking at it like, okay, the market on the whole, we don't really know what this election is going to bring. But interestingly, this could time out to be a frankly, like the way this is measured out, it could time out to be a pretty late move. Like this may not move till summer of next year. That would be a big bummer, but it's totally possible. Like one method of doing this would be to be proportionally exactly the same. In terms of timing, this would come down and keep coming down, ignoring any kind of December rallies, maybe until the very end, and then come down really low, and I don't even know. I did like a couple different breakout modes, but it basically wouldn't take off till like May of next year, okay? But the setup is identical, is what I'm trying to say. Like, it's nearly 1-to-1. It almost hurts my brain how close it is. When I looked at the parts individually, and I checked out the structure of things like the MACD, like the RSI. Basically, I just found that essentially it was identical. And the big one that got to me was, and I posted a lot of these comparisons in the Discord group. The big one that kind of got me was that on balance volume. This is what kind of rocked my world a little bit, because it's kind of difficult to get this thing to frame correctly. There we go. Because they have the same kind of build out on the on balance volume in terms of like where they start capitulating here. Now there's a difference in how that's set up, but what's interesting is that if you look at the place that this actually marks off, and this is what we were talking about earlier, it's up here, right? We were talking about that it's like a 50% marker. Right? For MPW, that place that it marks off where it starts that final drop is not the end. It's already sort of doing that walk down. It had actually been establishing a bottom here, just like we were back here, kind of establishing a little micro floor. And then look at that reactionary move back to the upside here, going into that bottom low, and then the reactionary move. Now, it's not over the top on balance volume like we saw with AMC, which was just crazy, right? And you might say, well, it's super negative or something, you know. Of course, it's different. It's not the same. But just noticing like the overall picture here in terms of like the overall pattern, it's undeniably the same. Like I can't possibly look at this and say with a straight face that there's no strong similarity between the two. There's a super strong similarity in the setup there. And especially when you look at where the creek comes from, which is back in this original downtrend, it's jumping that creek, right? Back at that original top. It's a fascinating example of perhaps an operator algorithm working against them in some ways if you're looking at it from a retail standpoint, because it's giving you a window into a potential trend that's happened not only on the small term, but also on macro stuff like with ETFs, which I just demonstrated that like not 20 minutes ago. Like it's the same exact kind of build out, and what's required is still the same, is you have to get the walkout. Now, does that mean like this is, you know, this perfect, whatever they call it, gift of an opportunity? I don't know. I know that from a technical standpoint, it would be hard for me to find something like this that has like the same qualities that AMC had in 2020 to 2021. I think that would be a challenge. And you might say, well, the only reason you have this is because you're already looking at it. Well, the only reason I was looking at it is because something told me I needed to look at it. When I went and set up and looked at this as a build out, there's a strong probability, knowing what I know now about what happened with AMC and the way that this built out, that it wouldn't be 1-to-1 necessarily. It wouldn't necessarily go as high as AMC, but that if the operators draw the same exact markers that they did for AMC, then you're looking at a potential move back up to near 33, which is even if it comes back down to $3 again, which is like a near 1,000% move. So for me, it's not like a question of, is this a good trade or not? I think it has the potential to be one of the best trades that I've ever found. It's not like a quick hit kind of thing. Like this technically doesn't intersect till that February 2026 area. We've talked about this quite a bit. It appears a lot. That was just like the tip of the iceberg in terms of the comparisons. One of the other great comparisons was the weekly 180. Look at where the weekly 180 was right here on AMC when it pushed up. The weekly 180 was way up here, like near that top. It was like at that level, right? That halfway point level. We drove away from it and then we rocket back up, and look at where we grab onto it right around that same level. Look at where that weekly is right here, the same exact level. Tell me that doesn't look identical. Okay, maybe that's not enough. All right, so what? It's a weekly 180. No big deal, right? That could be like one of many. You could have a coincidental connection there. You've already showed that the RSI looks the same. You've shown that the walk down looks the same. You've shown that the on balance volume has this early breakout that's the same. You've shown that it's got the 1-to-1 kind of nature with 2020 in terms of proportion and fractal movement. So adding another thing to that, it's just adding another thing. It's not a huge deal. I mean, maybe it is, maybe it isn't, right? What about the daily 180? Oh, the daily 180 is here at $5. Where was it back here? Oh, it was right here. It says 31 right now, but it basically had poked out above that daily 180 twice. Okay, where was the creek at, though, at this time? Well, the creek was a little higher. There's multiple lines that you can draw, but one of the simplest ways is to use those parallels and work your way backwards and check out where those are at different times, and you can see that, yeah, it's right there. Guess what? I'm not going to do it, but it's right there. It's in the same exact spot. That doesn't mean it's going to happen. It just means that it's setting up exactly the same.
Now, there's some things that haven't happened yet, one of which is that this hasn't made another downward move. What happened in on-balance volume on like the daily time frame here is that there was a massive dump. There's like a widening. There's a massive dump right here. They shook out a lot of people right before they ran. That hasn't happened on MPW. There hasn't been any kind of massive shakeout. Another thing that's worthy of noting is that timing. And this is what kind of got me like, whoa, now I'm kind of freaked out by all this, because there's a timing setup here that I find it to be kind of odd. I was thinking about it in terms of, I guess, like elections and earnings, right? So again, on the 13th, for whatever reason, AMC doesn't go up and form a phase B top presently. It did, though, at the very similar time in like August, September of, really weird, right? Because it's like really close to the same time in 2020. It does have that push up and checks that moving average, which maybe it did locally, maybe we did push it. We just didn't go very high above it. And in this case, there's a lot more similarity, you would say, with MPW in terms of the way this is built out. What about everything else, though? Like, I think there's a lot to this, and I think what the timing was, I was about to get to that point, I want to just keep going on that point, was that earnings, right? So I looked at the earnings here. It's supposed to be like today or tomorrow. It's always like a question mark with this company. Last time they were like a week late, so I don't know. But I looked at the general setup, and I was kind of observing like, all right, there was this pinch point, it broke out, it has the same exact thing here, breaks out to the top, creates what could be a phase B top. You don't have to go to a new low. You can have an LPS in a phase B. You don't have to have a spring. So it could go all the way down to 3 again before it goes. It's very possible, but it may not. It may only go to like 390. I looked at where was the gap. Well, the gap's right here. Back in 2020 on AMC, the gap was super low. There was a couple little gaps on the way up, but the main gap was like really low, right? That's not the case on MPW. There are no real major gaps until you hit about 391 to 385. And this built out specifically like right above it for quite a while. It would be similar to us looking backwards at AMC and maybe comparing it to this early gap right here, which happened in like April 2020, and saying that it predominantly built out around that gap, right? So maybe this has like a massive dump in it and it's going to go really low and have a really low reaction. Maybe not. I can't really say for sure because there's no secondary gap here, right? There just isn't. There are, however, some trends that are established, which are these blue lines, and I use those as a comparison just to help myself to keep track of everything. These blue lines are really important. You can see that this is where it distributes around its earnings. This was in November of 2020. Again, I'm not questioning at this point like the overall setup on the weekly. It looks pretty much the same. The EMAs are in the same point. The daily and the weekly EMAs are like exactly where they were for AMC in the same time period in 2000. I mean, almost exactly, right? Relative to itself. The overall setup has a massive on-balance breakout. Everything about it looks okay, like pretty good in terms of comparison. So I'm not really questioning those things. Now I'm just looking at the timing, and I'm looking at how there was a November 3rd earnings. This kind of pumps up and drops. There's a similar motion going on right now, but I wouldn't take it very far because it's a difficult one to kind of weigh in on. What I do know is that this cross trend right here on AMC was fairly steep by comparison to the one on MPW, which seems to be maybe a little longer winded, perhaps. The rest of the comparison looks pretty much the same. You can see the foretop almost. There's like 4 pushes or 5 pushes right there on this first build out. You can see that coming off the bottom here on MPW. You can see that low build out here to define like kind of the middle, and then you got that secondary push up. This motion right here, which is coming around earnings, would have to be compared to like the motion around earnings here or the same time period. It's kind of freaked me out because in October of 2021, AMC had that reactive move up before it dropped into earnings. And we're seeing like a similar thing here in October, right? October 21st, right here. They get this kind of push up. Maybe it's going to drop, going into earnings. I don't know. But then shortly after you get the election, and this is November 9th on AMC. It's right here. I kind of marked earnings, but November 9th is like right there where you get that big move up. But this ends up defining that later move, right, back to that liquidity spot, which would have to be this marker, right? This yellow marker that I marked off on AMC. It would be the same marker on MPW, which is around $5. That would be the one that would probably indicate, again, potentially like a halfway point of sorts towards the top. Now, it could be higher than that. Technically, there's more than one hit here. I picked one. It could be like here at 530. I haven't really finished necessarily this comparison. But my point is like, if you look at the overall setup here, it looks to me like it's sitting right here. And in terms of like being a one-to-one, the nature of it, it's almost exactly one-to-one. Now, beyond that, it's like, well, I don't know, because the timing of the elections and stuff is really close. It's like right now. So if it did something similar and you're talking about timing, then it should be popping and then dropping down low, which makes it like a January move. It's like would have to compress. So there's two issues with the comparison right now, okay? I don't have any problem looking at those indicators and saying that pretty much everything I've seen, including the macro setup, looks identical. To me, it looks like all we're waiting for is that kind of confirmation bottom, and then it frankly could be a massive short squeeze moment. But at the same time, I have to ask the question, like, why is it timing off? Why is the timing off? And it is a little off in terms of where this motion takes place. Because in 2020, and this is a little tricky, but in 2020, I would argue that the bottom is that first hit, and it ultimately, like the middle is where it jumps the creek here. And that's usually how I do waves. It's like, where does the creek jump happen? That's where the bigger wave top should be. Well, the creek jump that happened on MPW happens in September of 2024. And so that's a little bit confusing because it's like, well, it's a little later. It's like a month later than what happened in 2020. Who cares, right? Well, it is important because the timing then stretches it out quite a bit. So you guys are like, so this isn't important at all then. Not right now. No, it's still important. I think that it matters because one of them is like kind of backwards looking, and then one of them is very forwards looking. So one kind of looks at what's already happened, like this is the first half, so therefore the second half would need to last till May, which is what I was saying before. Like that's the suggestion that, oh, well, it really doesn't do the same thing. Instead, maybe it takes a diversion and goes down into May. And then something happens here and it catalysts up into maybe a June style move, right, to the upside. And it's really like a 6-month kind of thing. It's delayed. The other is like very much like in line with elections, which is no, it's going to pump in accordance with elections and what the market's doing right now in reaction to election season. I don't want to say there's some kind of great debate in my brain or something, but there is a debate going on that I have a feeling that if it doesn't run, I guess I'm not really super worried, because if it doesn't run up here, then I don't need to worry about the result, right? If earnings is crap and it ends up dumping really low, I've got the chart established in a place where I don't really care that much at this point. If it comes back down, it comes back down. So be it, right? But there is something else that could happen, and it's based on this idea that it didn't drop this creek right here. So it didn't actually drop. So one of the key differences, I suppose, if you were looking at these two, is that if you look at where the ice is, which is that middle right here, it actually dropped it in September of 2020 on AMC before earnings, and definitely before that October pump down here. So that's one thing that's kind of like pretty different. Like this didn't drop it. It's still above it. It's still hovering right here. It hasn't dropped it yet. It might drop it, but it hasn't dropped it yet. Another key difference is that in October, when this finally came down and pushed down before earnings on the 30th, this hit that red line. But it didn't hit the red line until basically at earnings. Now the red line is the bigger creek cross, the downward trajectory. That's the only place it hits, is at that earnings mark. We haven't seen that yet on MPW. It hasn't touched it yet. It's below it. So again, it could drop like straight down after earnings and tap 416. But then in that regard, it's like, well, now what? You got a week and a half till elections. Where are you going to go? Are you going to keep going down? Like, technically this should then break out and come back up, but that puts you back above the ice. Or are you going to deliberately kind of drive the price back up to it and then sell off from it? You guys might be thinking like you're a little all over the place, Booksy. I'm not really. What I'm thinking about is the fact that sometimes this build out ends in an LPS. It doesn't actually go low. It is possible that it may hit that gap fill on earnings, much like AMC did, filled the gap completely on earnings and hit that creek. It may react outward, but never ultimately come back all the way to the bottom. It's entirely possible. There's no other precedent for it except that, well, that's a low, maybe they want to trade it again. It's not impossible that it pushes out. And if it ends up following what we think might happen for like an IWM kind of path, right, which is a very different outlook than what we're saying here, it's entirely possible that the build out just goes ahead and rallies to the top. This wouldn't be unusual. It wouldn't even be unusual if it didn't drop, and hit that, because technically if this wave was incomplete and it needed to push up again, we'd probably do it right here and push up towards $7 or $8. So there's a lot of questions in my head about, well, does it have to be the same? Does it have to be 1-to-1? No, but it's freaky how similar they are going into a very similar time period. This being the election earnings season right here. I'll put a big green box around it. This being the earnings election season for AMC in October, November of 2020, with that gap there, and this being the earnings election season here with the gap below, and the rest of the build out being essentially identical. I don't think that this is a perfect stock. I don't think that fundamentally it's the best stock ever. I think they've got their share of problems. I think there are going to be some negative news about it as time goes on. I think that a lot of analysts have already predicted it's going to sit around $5. That's kind of like the average that they're predicting for the next year. Do I think that makes sense based on what we're saying here? Maybe, because if you look at from now till mid 2025, if it's just kind of whipping around here, yeah. And even the way I drew it out, it's kind of like, man, it could come back up high and go to like 9s or something and come back down. I did it a couple different ways, and what I found was that everything kind of works. It just depends on the timing. It doesn't really matter if it goes earlier or later. When you look at the setup as it is, if you consider like what AMC did with these parallels as it moved forward, these moving averages and such, it's got a very, 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 very similar setup, right? And it just kind of depends on the timing of it. You could say it goes later. It really doesn't look that different. It just doesn't. Some of the key differences have more to do with, perhaps where these kind of higher levels are, where you might suggest that 50-50 marker is. It doesn't really add up. This is something that I was like saying earlier. There's like certain things that are like perfect, and there's other things that are just not. This really adds up to this interesting little distribution level around 880. That seems maybe more likely, to me than this other top, but it works because that's where it intersects right there. Doesn't have to be there. It could be later, but that's that. I posted these comparisons in the Discord group, and I lament a little bit whenever I talk about this stuff. I'm not trying to complain. I'm really not. I guess it's not good to complain about stuff, so I shouldn't complain. I'm grateful that I have the opportunity to share this kind of information with people, and I'm just going to kind of leave it at that. But a lot of times, I said I was going to leave it at that, but a lot of people tune out. Like from the time I started talking about this to now, we lose like 30 viewers. And it's like, well, maybe some people just really don't want to get into anything else. And they really don't like the idea of somebody like pumping or making it seem like a play is really good and they're not sure about it. What I'm trying to do right here is not to tell you should buy MPW, okay? What I'm saying is that there are definitely signs here that this is a very similar setup. And ultimately, do I think that it could build out in a similar way and kind of catch, itself back up near potentially like pretty high marks, in the near future? Yeah, I do. And I don't think that that's something I should take lightly. I never liked the idea of coming on and saying like, oh, I think it's going to rocket or do this or that necessarily. Okay. But there's absolutely like a huge probability here in my brain that this is in need of a dire correction. And you're at an opportunity right now where you can make choices. Whereas AMC, it's kind of like we're running on deficit, most people are kind of trying to save the position. And what I think is fascinating about this comparison on the whole was it led me to these two other setups, which I hadn't really spent much time with, which is this concept of like, when you distribute, where do you go? I think I'd always use like that model of the cat ear as a helpful way of doing it, but that only gives you like an anchoring. We really look backwards further, like the entry into the range, that initial supply drop tends to define where you go. And it's across multiple stocks in the market. It's kind of amazing. And there's similar things on GME as well. And then the cool thing about it is it doesn't just define downside. It defines where you might go if there's a strong reaction back to the upside. And in the case of MPW, it's quite high, There's, again, different ways of measuring the same things. You could probably look at this and say, oh, I think this is right or that's right. Both of these, to me, are very valid target areas. 26 to 33 coming from a bottom area is still 1,000% move, no matter how you shake it. Is that 2,000, 3,000% like AMC? No. But I don't think the on-balance volume and the overall picture here necessarily warrants the same move. We know there's a huge amount of short interest. For me personally, like I told you earlier, one of the things that I really value about somebody like Roaring Kitty is that he had conviction in his play, and it didn't really matter to him if a lot of people were in it or not. At the end of the day, he built a community around that for a number of reasons. And ultimately, like, yes, there was that double-edged sword. Yes, there was a lot of different opinions about why certain things might happen or how they will happen. But at the end of the day, like, he kept his trade because he had conviction in the play, right? And I'm feeling like that way about MPW, and I haven't felt that way about most stocks in the market. I think NU was the last one that I had a strong conviction about. That did really well. It went from $3 to like $15. I mean, it did really well. But I haven't had that kind of conviction about a lot of trades in the market. And right now, yes, I'm like invested in both of these. But I found it very curious that that move in the same timing that I thought it would be there, in the same time that I thought it would be there on AMC, was there on MPW. I think that's fascinating. Like, it's incredibly fascinating, And now I'm like questioning, I'm sitting here like wondering, what does that mean for AMC if we think that, for example, like a stock like this, which is, you might say, oh, it's completely disconnected. It is, but it isn't. It's got similar valuations and it's got the same operators, and they're really heavily invested in this, like hundreds of millions of shares. It's also heavily shorted, which is a good thing. I know it sounds like a bad thing, but it's a good thing because you have a huge amount of potential for upside. But it's really interesting to me. If this had happened on AMC the way that it happened here on MPW, and I don't know how else to say this, I guess. There's not really an easier way to say it. I'm not really sure if this just was early or this is late or if it should have been the same. I don't know. But if this had happened all the same on AMC and this gone up to like, I don't know, $12 and then distributed and it was all the way back down to, $5 right now, what would we be saying about it in terms of like how it compared to 2020? Would we be saying that we think it's going to go back up? Or would we think that no, it's pretty much spot on and it might do something very similar to what happened in terms of a build out into a January move? And then it leads me to the question of like, well, what the heck, dude? Is this what is going to happen? Like a repeat of history? Are you just going to have like the exact same thing happen again? Like, I don't know. I think it's really strange because there's a lot of similarities between the two. Like it would have been like this, I guess, and then come back up in November. It would have hit this marker right here. And then it would have come back down into December. And then it would have taken off in January like this. This is basically exactly what happened in 2020 right here. And you're like, well, what the heck, dude? It didn't happen. It just went flat. I don't know. Are you still going to get the same move? Are you going to get that big pump up? It's going to be completely different. I don't know. It's tough, man. Part of me wonders, what if we just didn't get the move up? I mean, what would happen? People would be furious. They'd be mad at me. We talked about that. Like, what if it just goes to like 6 and then just comes back down? I don't know. It doesn't seem like that ridiculous when you look at the big picture and you think about if they're building it out to be like a big move later, maybe they just store it and then they use it later for like a massive move, to the upside. What's kind of strange about these parallels right now, I did the same thing as I did here. I compared it to 2020. And what's strange about the parallels right now is that, so in like 2020, AMC establishes these trends based on kind of like the top, basically. And then it ends up using them later as like the base. So it becomes like this sort of inverted head and shoulder, right? So it pumped up here and then it does this shoulder motion and it does this massive, ignoring like the major swings, it does this massive like inverted head and shoulder motion essentially, like on a rise. And it's probably pretty accurate. I'm sure it measures out to be about 50-50 anyways, so it's about 51%. Who knows, okay? It's probably about right. I'm sure it is. I feel like I've looked at that before. And looking at it now, it's like I can see that here. I can't see it on AMC though, like the local time frame, but those parallels are there. It's just not like there's no obvious like head and shoulder motion because you don't have that shoulder. Like it just doesn't seem to exist. So that's a messed up kind of comparison, right? You almost need to have that shoulder. So part of me wonders again, and I've said this before, and this is kind of where I've been at. It's like, what if you just go up now? Is it too late? Could this potential run right here still act as a phase B top? And I think the answer is yes, because if you look at where the phase B top would need to be, it need to be at like 1170 or higher. You can't get there to 1170 or higher without breaking this red line unless you do it pretty much after elections. Like there's no way. So you would definitely pass above it, So much like we see here, like this is, you guys are like, well, I don't know what you're trying to say, Booksy. What I'm trying to say is like, I have these like mixed feelings now because upon looking at this, I'm like, well, why did this happen? Like this one did exactly what we thought AMC was going to do. It's really weird. And not only that, but it's got like way more similarities in some ways than we do have currently to that 2020 bottom. It's almost unfair, I wouldn't go so far as to say it's not fair, but you know what I mean? And I'm like, I don't get it because does that mean that we're going to get that later? And like, why? Why would it need to wait so long? Part of me wonders if we had run on September 13th, if we really wouldn't have gone beyond $8, because that at the time was the place that we were sitting at thinking you'd have to do some kind of whip around. But guess what? That's not what happened in 2020. In 2020, it doesn't need to do that. Like it doesn't, it's far enough out that it comes up and it goes back to the top. So it does break out in our equivalent of the 13th, but it does that and then it moves up. And instead, we're not doing that now. We're just coasting, but the spacing between the two is very different. Like this and this are almost identical in that they both kind of push up, right? That's what happens here in 2020. It pushes up and then it hooks on that red line, that trajectory from the bottom, and then it drops. And that's what happens here as well. It pushes up and it hooks on that red line, and then it drops. Okay? But in our present time frame on AMC, it wouldn't have been possible right here. Like we wouldn't have been able to go if we're just obeying the red and we're ignoring like where we potentially go on the high. If we're just doing that, then you would have only gone to like $9 and then you would have hooked and dropped down, right? That's not the top though. Isn't that weird? So like in order for you to get back at least to the top here and make a phase B top that's higher, you have to go beyond, I think it's like 1190 or something, right? I thought it was 1190. This thing's in the way. This is 1188. I don't know. It doesn't really matter. In order to get back above that point, you would not be able to do that unless you wait. Like you can't go meet the red line and exceed that top unless you wait till after like November elections, essentially. It's the only way to get up there. So in order for us to get to like 13s or something and then do that little hook down through there without completely breaking the red line, but also while achieving a high, you need to achieve like a new high, you'd have to wait till later. So part of me wonders if that's like the reason that this looks so different is because they're delaying it because they want to get the higher move and get to the phase B top, which then begs the question, are we then in like an accelerated markdown period to get back towards the bottom? And my only thought is that, yeah, I guess you would be. And I've made that case before. I've talked about why I think that would be possible, even though it doesn't look possible. It's kind of strange, man. So I don't really mind if you guys don't want to trade it, but you need to be aware that I'm like considering these two to be bedfellows now. Like they're going to be together. And I think that it's really important to some degree, you know, for me to maintain that consistency between the two. Maybe there's not going to be a one-to-one nature. But I think it's really important on the big picture that we keep these together. You know, some of you guys are like, I don't really care about this, Booksy. It's not my thing. I get it. But I'm not going to apologize for it. I'm not going to say sorry. I'm going to watch them both because this is so much like 2020 that it hurts my brain. Like, I'm trying to like disprove it, you know? The biggest way I could disprove it right now is to look at that low, the difference in the on-balance volume and how low it was compared to AMC. And then also, that yeah, they're fundamentally different sectors of the market. But so far, like, I haven't really been able to disprove it. Like, they're so similar. So I'm just going to watch them. And what's great about this comparison that I did yesterday in my off time was that, I say off time, but I was working, is that I find that it was a really, I guess it was like the best way to describe it was like useful. Like it felt like a really useful session because I found some things, especially with like IWM and the way that these bottoms formed in the past, that just really rocked the view that I have on the setups for distribution. I guess there was an initial maybe presumption of sorts that there was, I don't know, like more to it on the top. Like I would not have looked at the preliminary supply as like the main tell, which is weird because I do that. It's like, it's so obvious. I do it with the preliminary supports too. Like I look at these and I say, yeah, these are the main, this is one of the main tells. Like I don't know why I didn't do it the other way, but now that I've seen it, I can't unsee it. And there's this really cool topping mechanism that's being used in the market that's driving to these low prices. And I'm not opposed to like the idea of buying puts either. If we saw a situation like this in the future, like where it's clearly distributing, you could have a really easy way of identifying like a potential future target that's really low. And that's historically been very accurate, which is strange. And again, this is an example of one that happened outside of COVID. This is really began 2 years after. So it's not like it's bound by these tragic cataclysmic events, you know. It really is like a universal pattern of sorts. So I find it to be really compelling. Yeah, and I guess that's all I can say about it for now. I did the comparison. I needed to do it for my own sake. I wanted to do it. I'm stumped. We still bullish or did we flip? I never flipped. This is, Dave, this is kind of what I was thinking about going into earnings and elections. If we didn't get a breakout early, we could rally to $6 early, or we could drop low first. There's not like a huge significant difference between the two because when we did it, the point and figure doesn't change very much. So the reason that it was important was because when we looked at the P and F, it actually just offsets it. If you drive the price down to like 350, it just offset it enough that it doesn't come as high. It doesn't go to like here, it goes to here, right? So I don't remember when I did that illustration, but when we talked about it originally, it was like, if you looked at the original breakout on the P and F back here, it was pretty high. I want to say it was like from 414 or something like that. It goes up to 635 or 1635. And that was kind of like the thought that we had originally, was that you'd add it to the bottom. When you did point and figure, you add it to the bottom. That 8 is like a halfway in 1635. So we had a P and F that was giving us really good high numbers between 15 and 17. We were averaging around 16. And I think what I did is I took that number and I said, what if you drive that back down to 350? Well, guess what? When you put that at 350, it gives you 1380. So when we look at that, it doesn't really change much in terms of like the overall outlook. Dropping to 350 has been on the chart for a while. Some of you guys are like, no, it's not. It is. I don't keep the messy stuff on all the time. So like there was a lot that I kind of hid so that I could clean up my chart a bit. But early on we talked about, I'm opening it back up again. We talked about this coming down to 3.5, what that might look like. It's all the same. Like go back and look at this versus what I just showed you. P and F goes to 16s. I had it on the chart, and we talked about how like really there's a couple different options for how you navigate through earnings right here. There's a few. We talked about them all and what that would imply. But one of them was like this low where you come down bottom and then you make that way back out. And that's when we talked about, well, you could rally from here and it doesn't change. So this is messy. I haven't kept it on the chart for that reason because it's just me doodling while I'm talking. These aren't meant to be like hyper predictive. It's more about how you navigate ranges. But notice that this setup has like an early push. This is the one we were just talking about. See this yellow guy? Like an early push that gets you to like 8s or 9s and then comes back down, and it's essentially like a 2020 build out. This is what I was just talking about on MPW. It's essentially the identical, or even right here, right? This push up and then coming down and breaking out. This is the exact same thing. This is what was part of the expectation, but it can't get to that high unless it waits longer and the build out is slower than this one was, which goes back to the high and then it comes back down. So everything might seem a little disjointed today, but it's not. Like nothing's flipped. It's all the same. So like the idea of coming down to 3s has been on the table for a while, since we came down really when we started breaking. I guess it was back in early October, maybe about 20 days ago, because it was right here. I started talking about how if it didn't hold, it could technically capitulate here and come lower. It's still held up pretty well, although it's possible this is an LSPY that's just going to bear flag down to the bottom again and try to break 4. It may be somewhere in the middle, but my big thing was that if it does that, does it drastically affect the price target? And the answer is it kind of just offsets it. Again, like if I look at the $16 target from where we were sitting before, we were saying you should measure from 415. That's what the P&F told us to do. If you take that and you drive that down lower, technically like get back down to that bottom at 350, yeah, it gets you to the right zone in the right time. Do you see 350 drop either way before the next move higher or lower? I'm saying that it would not surprise me if we hit 350 first, but it would have to be kind of a major reaction. My biggest concern about 350 is coming back up and getting stuck at like 5 or something. You know, like part of me is concerned that we're just going to bank the move. We're not going to do either of these, and we're just going to hold off, or maybe coming up to 6s and then failing, right? That's kind of my biggest concern. But again, this isn't anything new. Like, do I think it could come up and then fail at 6s, you know, or whatever? Sure. Like we've been talking about the $6 area and the $8 area as potential failure levels, but I will say this: if it's just delaying the move because we don't want to get there too quickly in order to continue to build out this much larger 2020 like bottom, then it's possible that we're really just using the elections and earnings to drive the price up to the 13s, and then we're going to drive the price back down to whatever low after. In which case, I don't really care if it hits 350 first anyways, because in the end, it's just a giant, reaction. It's kind of like, let me think of a better way to put this. It's kind of like, I kind of like this chart right here, so I'm going to use this one. Like, let's say, for example, that this hit 350 first. It doesn't quite get to the gap. That's actually still kind of similar to what happened in 2020, because in 2020, it didn't hit the gap till earnings. Now, this doesn't hit the gap, right? It doesn't go all the way down. But that's sort of what happened there. It like barely taps it, and then it reacts way back up, and then it comes crashing down after elections, okay, are completed. So it just kind of absorbs it in terms of distribution. I've already said it a couple times. I'll say it again. I think this is kind of my biggest concern about the current setup, is that I'm wondering if it distributes here and just sort of stops and just kind of banks the move again. I'm not sure. It's possible. It's not fun, but it's there, all right? However, one of the things that would help us with, if it does do that, is it would indicate, like, if a touch happens here, it's going to help us to indicate maybe a future price target. Right now we have this trajectory. It's all I've got, and it's kind of like built upon a certain principle that you're going to come up and hit that and then react. If you never hit it, I'm not sure it's that valid anymore, but I'd still try to use it. if it does come down to 350, meaning it doesn't hit the upper one again, I'd be like, I don't know. Maybe it's not worth using the comparison anymore. But I think it will. Because again, wave down, break back out. Like at the end of the day, this is kind of what I'm seeing as important, like in terms of the movement, right? Like this is what I mean when I'm doing the wave stuff. It's not just because it's a fractal comparison or whatever. It's always something else. Like there's a way to get to a phase B top through this if you can break out. Okay, easy enough. And it tests the major outward creeks, right? There's all kinds of stuff that good that happens up here in this little zone. Okay. But if we go down first, although that would be kind of unfortunately painful for us and maybe not fun, the good news is that that does help define some of the motion later. And we see that in the 2020 model when it does bounce out. It does help define some of that motion potentially later if it goes low again. I've already argued my case for why I think it could come back down. A lot of people won't like it, but that's okay. Essentially it's a build out that's very similar to what happened in 2020, albeit a little crazier. Now, we just talked about how maybe, for example, on MPW, it does do something much more like 2020. It looks pretty much identical. We were just talking about that for like an hour. Like maybe it does something that's almost identical here, and then it comes down and builds out the same way. It's totally possible that AMC is not going to do the same thing, One thing that's curious to me about this is the gap is really low. It's like at the bottom of this bar here, not the top. And so it's at like 291 or 292 or something. And part of me wonders if for whatever reason they use some kind of news. Like, for example, if they drop this all the way through and it went all the way to the gap, instead of 350, it goes all the way to 3 or 291. Okay, and they actually achieve the gap fill. Is that a check on that? The answer is yeah. I think that would constitute a check on the creek. So part of me wonders if coming low could actually indicate that we're going to go now. Like we're not going to spend all this time going up and back down. It's confusing. But maybe, for example, another alternative path. We know the blue didn't really happen. But like, let's say, for example, this dumped. I don't know how else you would look at this because to me it looks like it kind of breaks a lot of stuff. But let's say, for example, it dumped down and then it recovers. And instead of rejecting here and then heading low, which is still likely, but instead of doing that, it actually pushes up and builds out here, then goes up to the top. One might say that doesn't look any different than the other green, but it could be very different because if you go low early and you fill the gap and then it goes all the way to the top, this could be basically like a SOS instead of a phase B top. Because essentially it's like made a double bottom. So it could be thought of as like a potential phase B bottom is already made, and so you could be going into this could drastically change the way that we see the future play out. You could have more of something like a walkout here. So it's very significant if it goes lower than 350 and goes to the gap early versus later. But for now, it's like this just looks like me scribbling a bunch of bazillion different ideas. I really think that it's a one thing at a time kind of process. You go through the motions here. Do I think that this is by nature bearish? Well, I mentioned earlier, it doesn't have to be bearish just because it's low volume flag looking thing. But the problem is that if you don't come back above that floor, then there's really nothing overly positive to say about it. Right now it's potentially bearish because it just kind of dipped its head in over the top and failed to go. So did this jump the bigger creek coming down? Yeah. That's done. No one, I'm not going to sit here and say like it's all bad. It's not all bad. That's done. It's right here. It's waved out. It's done it. But what happens if it fails to advance? I kind of already know the answer to this, but if it fails to advance, then it typically goes back to the creek. Well, the creek's low. So there's a difficult equation there, right? Of like, all right, it has to make a higher low here. If it starts dropping beneath the floor again, there's really no reason to suspect that it's going to just dip low and then return. It could, but it would seem more likely that if it drops again, that it's using this to gain sellers. They're dropping through here to go drive the price significantly lower, probably to like that 370, 350 area. And that's actually where you'd meet that low creek, which stinks, but it is what it is. If you can't advance and you fail, then yeah, I think you're probably going to head back down. But I don't see that as like necessarily horrible, you know, like that's the question. I'm not sure I can answer right this second. Because that could just result in some kind of like a massive reaction back up. So it's sort of stupid because, and I don't mean to use that word lightly, but it's sort of dumb because it doesn't, I like trying to catch bottoms, I really do, and I like when I can see them, but at the end of the day, like I said it earlier on the stream, there's no reason to be overly speculative until you see that build out with the higher high and the support. So like I was talking about 440s a lot and then 460s because what will happen before it's all said and done, if it goes up, is it will go push this level and then make a higher low, you know? Like that's kind of it. And you don't really need to be overly concerned with, like it has to do that, right? So whether it goes down to 350 first or it holds itself here, I'm not saying it's inconsequential. It does matter in the long run, like what could happen. But for somebody looking for just a breakout, you're still just looking for that push up with the backup that holds. If this happens, you've got confirmation. If this doesn't happen, then I don't think you have strong confirmation. So all this other stuff is maybe dependent somewhat on maybe those ideas, but they're not it's not possible to know like in advance. I'm not other YouTubers who sit there and try to tell you that they know exactly what's going to happen with the reactions and stuff because of fractals and junk. I can tell you that certain things are likely because the reason the fractals break down at certain levels is because of things like the ice. Like this elevated trend here would be one that would be logistical, right? A logistical breakdown. Like it makes sense. Which is why I'm a little bit of a worried about this area right here, because I'm like, yeah, that to me makes sense if you're going to sell off to drive the price in this region right here to sell off. That's a concern I have. So yeah, there may be, like, again, 2020 may provide you with some kind of a fractal that looks similar to that, but to say it's gonna do that and it has to do that is a different thing than just being like open to the idea that that's a place where it could drop. So you gotta just be mindful of that. Like, sure, yeah, the idea of dilution could be there. If it dilutes, it'd probably be up here. You know what I mean? Like that's probably where it would happen. I don't think it would happen way up there. But yeah, you don't need to go significantly higher in order to get a distribution going. I guess what I'm trying to say. It may seem like you do, but you don't, because there's this long-standing trend here that matters. And if I guess you willfully ignore that, you might kind of be surprised but it doesn't need to come much above like 460s at this point to distribute, and that would be like the hook zone. So I find that to be the most disconcerting area between basically 6 and 470, maybe. It's like that, to me, that's my biggest worry, I suppose, at this point. Like, that might be part of the plan. It's a bit odd because I think that, again, part of me wants to believe that Adam Aaron won't do that. And I know it's not just him, but like, I could see why that would work, for the operator. At this point, I basically have the exact same thing. Let me get rid of this yellow one. I could see why that would work for the operator. Yeah. I don't know if that throws a big enough wrench in things that I would be overly concerned, but it would definitely be unpleasant to witness that. And I'd feel really bad for all the people that are invested heavily in AMC who wanted to go to like 13. And I do. It's not like I don't. How would you know, Booksy? I don't know. You wait and see if there's a rug pull, a distributive top here, probably. Yeah. The other thing that this does is it kind of throws, again, a little bit more of a wrench into the idea of where do you hit a high later. I think that what throw me off about this setup would be I couldn't imagine it not coming low if it does something like this, first of all. Like, not making a new low wouldn't really make sense to me. I've talked about coming down to 2, and I know it's not something people want to hear, but it's there, We talked about those parallels. There's definitely a drive to that region, potentially low. So, I mean, after that point, who knows? Then it's like, oh, okay, well, we may end up playing very well into another January run-up. That's huge. I guess my concern is that if, for example, you did that and you do get that build out, I would be a little bit thrown off by this low. Like, if it doesn't come above here, it's just strange. Like, where does it go? This was never reconfirmed, so it'd be strange. Like, maybe it only goes up to 20s or something. It's just odd. It kind of makes it look like it's on a slope. I'm not a big fan of. Where's that level at? Yeah, I don't know. Maybe up here to like 33 or something. Seems really high. And then, like, where the heck is the creek? It's not there. They never checked it, so I don't know where it is. Like, no idea. The weekly is like way out there. This is probably where people are getting their ideas that this thing's gonna like moonshot because they think it's gonna go like way up here. I mean, it'd be incredible, but I just can't. I don't know, man. I don't see it. I don't know where it would come from. Be something else, I guess, if it did do that. I'd probably wait until this was finished and then do another P&F for it and see if it's increased a lot. Point and figure for it. Because maybe by this point we can include all of this and just use it like as a massive point and figure and just count it. And yeah, maybe. It's just bizarre without any kind of push. I would think it would have to come back down at least to this $11 top. Nah, maybe that's what happens. Who knows? That's way off in the distance. Or maybe it's delayed, you know, like we kind of assume things have to happen at the similar time, but we were sort of showing that on IWM, or we were showing that a little bit on MPW, that it kind of looked like the way this is set up, it may not run till May, summer, or going into summer, in which case everything is like delayed, you know, and the assumption that this runs in January is just based on the current principle of like the setup with March dropping in and the reactions and all that stuff. But who knows? Maybe the build out's long and slow going into May, and then you don't really get that working out until way later. I don't know, man. Anything's possible. Kind of works too. It's like retests the bottom in May and then runs, and it's just like a May to May cycle where it just ends up back where it was in previous May, and that'd be a huge range, like a huge amount of build out. Yeah, it kind of works too, like 1, 2, and then 1, 2, like the build out would be a little more logical for a waveform anyways. Because it'd be like high, low, and then the build out, slower build out, going up, ramping up. And then 1, 2, yeah, it kind of works. In terms of a wave analysis anyways, and then this would be more like late 2025, which is kind of what I suspected anyways, but I guess we're just kind of spinning tires at that point. So yeah, what, 44.89 looks like lines up pretty well. Closed at 46.41. Somebody asked if I'm doing animation. Still, yeah, I'm still doing it. So, do I want to trade full time? I don't know. I think the idea of trading full time is a little bit of a difficult one for me, because for my personal goals, if I could achieve a certain number, then I don't have to trade really full time. Like it could be something that I do maybe once or twice a week, and then I would be set. And I could still do what I want to do on the other side of that. Yeah, if I'm making like 200 grand a year or something, maybe I'm doing it like all the time, but that's not really my goals right now. So 46.41. So this intersects here on like in June of 2025. I mean, what do I think about that? I don't know. It's pretty close to that marker too, although these parallels look wonky sometimes. All right, Chuck, I heard you the first time, buddy, but I'm not going to pump it. You're more than welcome to go check it out if you want to check it out, but it feels like you're kind of spamming it, so just don't do that. Thank you. Yeah, I don't know. The way I did these parallels this time also looks kind of wonky. It's not quite where they should be. I did them on the other chart better. Wasn't this angle like the exact same though? 68, 66. So I did something wrong here. I'm pretty sure it was like identical. Yeah, I'm almost positive. It was like exactly the same angle. So I think I did something slightly wrong. That changes it, doesn't it? This doesn't really matter. It's just me trying something real quick. Yeah, maybe. So it's like this would imply that you could get there by May or June. So this actually, the angle being the same, has a greater implication that this drive happens more similarly, I guess, to January, a January move followed by a, I don't know, it's just different. Followed by a secondary move up. What are you doing, Booksy? I don't know. Now I'm just wasting time. Hey, let's finish up here by, I'm kind of curious about something. So one of the things I noticed while I was doing this was this middle ground area being tied to that LSPY. I'm sort of curious if we have something similar presently here, because I saw it, we did the comparison a few minutes ago, like for hours on MPW. It's really obviously there, that walk down level, but in these pockets right here, I don't know where it is on AMC though. So this is back in 2023 in June. I don't think it's up here. Hang on, let me try something. Where's that RSI? Well, that is interesting. That walk up right there is very similar to the first walk up here. I wonder if, hang on, where's that on balance one? Oh, this is the daily now. This screwed up. Hang on. I was using the weekly. Yeah, there we go. So where is this on AMC right now? Let's take a look. Can't even see it on AMC. It's like way up here somewhere. Oh, what the? What the heck? I don't even know. What do you make of this? I guess this is confusing because a ton of people sold here, but there's no indication of that. I guess it would be this, right? This push down and the breakout above. Like, it's have to be the same. I don't know. It's confusing. Oh, nice. Yeah, finally. Yeah, I guess you'd use this area, the October area right here, as that same hook mark. So that's the halfway point. I was trying to figure out if I could find the same marker because this had a really good one up here, but it's not actually where you think it would be, which is at 39. It actually is higher up. That's like the halfway point on the bigger move. Now I'm confused because if it's a phase B, what is going on? Can't be both. Can't be both. Now I'm confusing myself. See, this didn't come above this top marker until January, and then this one does. So I'm like, what? It almost works better as the other, though, because of where it is. Like, visually speaking, it doesn't make any sense because this didn't jump a creek, like, not in the way that this did. So it's confusing. I'm confusing myself. So it's just different. That's probably all there is to it. I wouldn't worry about that. Yeah, it's just different. I don't think it's going to be like perfectly one-to-one. But I do find this to be quite compelling that this jumped up here like it did, much like what was happening here. So I think that $11, weirdly, may be representative of like a near halfway point. But let me also check something else. Let me check RSI. That looks just like on balance volume. It's weird. Because we know this is really similar to 2020, so I'm going to use this as a side-by-side. There's no divergence like there was back here. Like, there's no long-term divergence going up. It just doesn't work. It just doesn't exist. Yeah, so it's just different. I wonder, so this jumps over. See, even it's funny, it has like an early breakout. This did not, though. Maybe almost. It's like almost over it. Maybe. It's trying to like hold it right now. Maybe it is similar, y'all. Maybe it's like pretty much the same thing is happening. And this is right where we thought, I know I keep saying it, but like this is where we thought it might push up again. Look at what happened back here when it came close to interacting with the moving average in that line. Pushed up again. We're doing like a three-way comparison right now because I'm kind of looking at three different things. Yeah, this is similar. Kind of came down and pushed up again. I wonder if that's where the markup jump is. You know what? I think I'm right. I guess like, well, nothing else is new. I think I'm right though, man. I think that this is why that pushed off. And we didn't do that here. We kind of came up. Why in the world does this look like this? We just died off. Like we never retested that level. So when we get to this point, there's like a really tiny push and then it drops. It doesn't come back down. This one does. That's why it has that bigger reaction. See? Like it hits that just like we did in 2020 right here. AMC doesn't do that this time. It just gently barely comes back up, but it never touched down again on that trend. So there's no strong reaction. It hasn't happened. Maybe it will now that we're down there. I mean, this kind of has like a double bottom right on it, right there, and then it goes up. Maybe it's just super slow. It's just going really slow. It's building out differently because it's just moving slower. Maybe this bottom part doesn't happen the same way. It's just weird because I'm like staring at the chart and I'm like, I don't see it. It is not, definitely not there. It barely reacts off the moving average. And then it just dumps like a four top would, like it's distributing. Now it's bounced. But see, these bounce out and then they cross up and over. So this would have to be on the weekly if it were going to be the same. You have to bounce out. It kind of looks like it's ready to make a higher RSI, but then you have to like push out again. That could be it. It's really pretty cool, but kind of frustrating at the same time. And that pushes it above the 50 on the weekly, and then it comes back down and it camps underneath the 50 until it breaks out again in January. So this comes as high as like 62. Maybe have to do with this level back here, because even though the price action is not the same, this is the place where we were talking about that LSPY ends, and this is that top right here. So like that transition between these two ends up being the place where the RSI gets kind of stuck. Technically it's ahead of itself. It's like already divergent because this is like breaking out and this is down lower. We want to see something similar, and we know if we're going double up back up to this area in the 30s and 40s. Dang it. Of course it's a halfway point. I think we were right. Yeah, that's the halfway point. Then you would already be divergent with this as like the top. So you'd be messing around with this area. Yep. So potentially pushes up, comes back below the 50. I don't know, man. This one comes all the way back down to the bottom. So if their goal is to flush out some people, that's what would happen. I mean, if you're looking at the 2020 model, that's kind of where it is. It's just late. They're using like a different catalyst, but you could have the same exact means to an end. The difference is that you wouldn't have this like long-winded bounce at the end. It would just be some kind of fast-moving, I don't know, dump. And then you could come back up, break out again. It'd be pretty quick. See, like this would be happening like this one where it's actually not getting there until later. It's lovely, confusing, isn't it? So then that jumps it up. I don't know, man. I mean, it's okay, because if it goes to 13 now and then came back down, then I think, yeah, I could rock it to like 30s. It's almost like too high, but it may not be that far. Maybe up here. No, it only needs to go to the halfway point. starting to wonder because the halfway point's not very high. See how this like comes up above on RSI and it camps out at that level, but the price is actually underneath it. We're getting mixed signals here because the halfway point seems to be defined as $10 or $11, and I'm talking about a percentage halfway point, which is kind of confusing, but it makes sense when you look at certain things as opposed to others. It makes a lot more sense than anything else. We're definitely seeing a divergence already because you can see the RSI is built out. We're kind of finding that it's building its footing here. We're really low compared to where we were back here. So, yeah, I think the correction would be fairly mighty. What's confusing is that I'm having a little bit of trouble understanding which would be first. It's like, would you hit this and come above? Because it seems like that makes more sense to stay here, but that doesn't match up with this other marker. Maybe it hits like 20 and then comes back down and pumps again later to get up to the 60s or 40s to 60s or something like that. It sort of adds up. Sure. Well, the reason I'm saying all that is because it kind of implies that you wouldn't necessarily go, and we'll see what happens. I guess we'll have to just wait. I feel like it's going to be different. There's a certain je ne sais quoi about it that's just not really, can't put my finger on it. Like, it would be a lot easier if it looked like MPW. Because I think that this looks pretty straightforward. Like, it's almost the same setup. So I don't know. But AMC doesn't look like that right now. We'll find out. 421. Kind of seems like we might be breaking down a little bit because we dropped that ice. So, yeah, it happened in a weird way, but it was sort of what we were talking about earlier is like at some point, if it breaks through there, you got a possibility it's going to capitulate. And I was worried because we had left that gap. So now we've got a flag that's broken. Just keep it simple, you know, like could have a hook here, but other than that, if it doesn't come back above 426, it's kind of shot for now. There's a creek coming down in the realm of, I mean, it's pretty low. Maybe like 415, something like that. So I'm gonna watch 415. I think that's like the next big level here. If it doesn't stop, I don't know. Nick, you gotta realize that all I can do is give you technical levels. I don't know whether those technical levels are going to be realistic or not based on what your expectations are. I mean, frankly, we could get up to 40 and be done depending on how fast we get there. I think the longer it takes, the more likely we are to get to like 60s to 80s. You could get up to 120, you know, depending on how things go, but you start talking about pre-split, post-split junk, it really just looks like returning back to the original value of the stock when the stock was incepted, like when it was brought into the public. That's what it looks like to me. I think there's a decent case to be made that we go back to some of those levels, but I don't think there's a case to be made that it goes way beyond that. Unless you're just all about mother of all short squeeze kind of stuff. Excuse me, yeah. Well, I'm about to wrap up the stream, but there's really nothing new under the sun here. We've got a walk down. We talked about maybe coming lower on IWM, what that might look like. For everything else, could be following suit. Yeah, I mean, it's sort of just chopping through all the levels we had. Interesting little gap through this S-curve. I believe in this S-curve, by the way. I know that it's a hard one to draw, but I really do believe in it. So I think that I think it's following it. I think it's gone beneath it. So we're looking at a potential wraparound. This is pretty typical. You can see like the wrap, the wrap, the wrap. Like, not like hip hop, but like, or veggie wrap, but just kind of coming around a, in like almost a 50-50 fashion, coming through. We're basically just trading. When you're trading on a S-curve like that, when you make those big reactions, you can see visually that it's trading across that curve, right? Hopefully you guys see that. And it's not that complex. It's actually pretty straightforward. So when I look at that, I'm like, okay, that seems to be the general way of movement here. The same thing was applying in the previous time as well, when we had like larger, or even a larger time as well. You have larger S-curves. So you take a look at maybe how that cookie crumbles there. I've been talking about 216 a bit, and it does look like maybe that's on the table, but I'm still more inclined to think we're going to get to like near that 212, 213 area. Come back to that bottom again. This is pretty much 1-to-1 at this point with what happened here. This iterative move down looks like the same exact thing. So I hate that because it probably means that we're going to get a similar a similar move out again back up to the top. Probably around elections, to be honest. We'll see. But that would not surprise me at all if we got like a pump up here, up again. It's creating like a gigantic rising triangle, which is kind of cool. Maybe that's a good thing. I don't know. Maybe then it drops on elections and does it again and breaks it. Like it does a similar drop. Maybe because this is set up higher, really high, it doesn't come that low, and then just takes off after that. That would be like a 1, 2, 3. Rising triangle is better than a rising wedge, which kind of looks like it is right now. But if it can hold that line and does it again, it could be a massive rising triangle, which is a very bullish breakout if it gets it. In fact, probably could even just quickly do that measurement. I always forget what it is. Ascending triangles. Yeah, maybe. Up is 70%. That's pretty high. Down is 44%. 70% of the time, it works every time. A to B times 70%. So probably be easier just to do a do this and then look at roughly where 70% is. So it's like right, this is 6.5, it'd be like right around here. Be around 250. That's the number that I picked out a long time ago for the top. It was 251, I think, but whatever. It's about 250. So presumably this would push up to about 250, and then we'll see. Then you'd have to kind of wait. And then it probably would back up. That's my thought about it. It works. So if this does turn into a rising triangle on the basis of that possibility, then it's got a price target of 250, which is about, again, pretty close to what we were expecting anyways. I mean, I think we've gone back and forth between like slightly above there and slightly below there, but I mean, 252 for the longest time was something that 251 was the one that I thought we were going to get to. It's been on my chart forever. So the triangle looks like it's building out to potentially get you there if it breaks to the upside. So if this breaks above 226 later, I would definitely be thinking that it's going to go all the way to 250. It could be a really strong move. When does it get there is another question. I'm not really comfortable answering that right now. We have to wait. But I think maybe around mid-December. Well, we'll see. We'll see how it goes. Yeah. I don't know, man. Part of me wonders, I just keep going back and forth on it. And I just kind of wonder. So when did this go up? This was in July on like the 8th, and it came back down on August 6th. So it was like a month. This is off. July. It's weirdly off. Well, I was just thinking about something. Never mind. All right. Well, I think I'm done. I'm like really long day today. Tired. Appreciate you guys sticking with me. Those that stuck with me through the comparisons between the two. There's probably more of that to come, but I'm just sitting on it right now. I think it has to do with a lot of things, but for now, I'm just going to kind of leave it at that. So I don't necessarily think it has to be one-to-one. I'm just saying that the setup looks really similar. And then ultimately, like, what it helps me to do is helps me to better understand maybe AMC currently, and then the bigger picture on like how that setup happened with the distribution way back for years and years and years. I think those things are very important for a couple of reasons, but big news being that I think we're in a good spot. We reverse the stock and we look at what happened here. There's a good argument to be made that it's a similar setup in some ways to what happened here, but in reverse, right? With that, remember that SOW, as we call it. It's really the inversion of what we're seeing there with this backup, the quote-unquote SOS, or a automatic reaction that happened, if we want to look at it that way, that pushed back above these tops. So there's a similarity there in the build out, and it doesn't always like appear that way at glance, but if you flip the chart, you can kind of see what I mean. Like, it's really similar, in some ways. I think we're just questioning whether or not it's going to have that second push down before it comes up. But it looks good to me. It looks like very, very strong potential that it's going to come far. So I'm going to be repositioning. I mean, going into elections, I'm definitely going to be getting ready to put some stuff into it, you know? What I think is strongest. Yeah, I think that's really powerful. I feel like it's the same thing, you know, just in reverse. I feel like bears are grasping at straws here, trying to get it back up. Isn't that amazing? Like, I find that to be so crazy to me. That it could basically be like an inverted example of what we were talking about on like so many stocks, right? But this setup right here, and I know we do this all the time, but it's like, this is super cool, you know? Like the fact that this setup reads the same in upside down land, and that it looks like it's about to do this, but for us it's like going the other way. And that's really powerful. Yeah, this definitely kind of gives it a different vibe. I'm like, this definitely makes it look like it's totally possible this doesn't go up for that top. Instead just does a little pop and then like a drop and then a pop. Doesn't it? It's like, yeah, maybe. It seems like that looks like the same. That's crazy. $19. I just can't stop, can I? I gotta try one more thing. Hold on. That's fascinating. Yeah, that's crazy, dude. What does it mean? I don't know. I don't know. You can even read this chart right now. You'd see what I'm doing is I flipped AMC upside down. I'm looking at the top of MPW, and it's like the same. This concept's the same. It's just inverted. I think what this is telling me is maybe not what we want to hear immediately, but long term would be very, very good, because what it looks like to me is the opportunity, maybe that window to see that push up. I don't know, man. It doesn't seem like super necessary in order to get the move that you want to get. But the good news is that kind of puts into perspective, like you could have it come down pretty low early and it could be very, very positive, you know. It doesn't even have to go that low technically, but I think it might need to. Kind of makes it look like it's going to drop into December. I wonder if there's an assumption that this year that there's going to be a dump. Maybe earnings pumps it, elections dumps it, you know? It's kind of backwards, but... Or we get that little pump and then it drops. So this doesn't drop. See how that's a creek that's a like an ice rebound if you flip it over. If you flip this upside down, it would be like if it jumped up, broke the ice, and then came back above it. And we always talk about that, and then it starts making higher highs. It's really similar. I don't know. I don't know where that would be on AMC though. It's hard to say. I'm not sure. It may not be as dramatic as I'm drawing it, is what I'm trying to say. Like, it could be far less dramatic, but I can't really find the point. So, maybe it only does fill the gap. Because that, I mean, it could be enough. I don't think there's some kind of rule that says it has to come up. It doesn't. I don't think it does. I think it just has to break above this mark. I don't think it has to go all the way to the bottom again. It's sort of like the LPS versus spring idea, because even here, like, this is a top and I don't think it actually breaks new highs. No, it doesn't. So debatably it could have just come through here and hit that mark and turned around. So all I need to do is find that red mark. I think I already have it though, right? Maybe. Isn't it this guy right here? Like, inverted, of course, but isn't it this guy right here? I think it is. This is kind of cool. Yeah, because this is where it breaks out. It does the wave cross in the beginning, and it holds right here, and then it breaks through it again later. It's the same mark. We just don't have a lot of interaction with the line, so it's kind of confusing because it doesn't... It's confusing because it doesn't really add up like a ton of... There's not a ton of interactions like there are here. You only have like a couple. That is the marker, though, and we're kind of avoiding it. Like the plague almost now. Another thing that's sort of maybe a little bit bothersome about this is this idea of like the floor is really over here. It kind of makes me wonder if there's a secondary one. Something changed. Yeah, like this one also works. So there's multiple red lines. It may have to do with that change of character we saw with that weird upthrust. Yeah, right here, and then it goes down. Oh, but it can't be that, because we'd already passed that window. Different way of looking at the same information. It definitely looks like you could come down and fill the gap, potentially. And I don't necessarily know if it has to bounce out. That's kind of a question mark, because I think if it goes up to that 291 and gap fills, it's already on the other side of this, so it's weird. It's different. It already moved out. So it already did the low, and then it pushed high, and it's come back down. So it's already kind of done that motion. It's just missing like that last touch. I don't know if this is going to go back to twos again. May go back to just the gap and just hit that and go. It will depend a lot on what happens here, because it's going to establish a trend. Yeah, this is kind of wonky, but it is what it is. I can't fudge it. Ooh. See, I think that's what we're kind of waiting to see, if that'll be the marker that determines it here. So if it comes back up and can find support here, it might just run. If it doesn't, then I think this is where you've got kind of two separate paths. Part of me thinks, yeah, I can come back down, but it'd have to come down pretty quick, like going into December. That's only if it's going to make like a spring. And then they would just come out and there. But if it doesn't, there's not really any reason this should go backwards, because it's already on the outside. This is why this is kind of confusing. Without making that phase B top here on the 13th, without pushing up to the 13s, at first it's like, are they just pocketing it to go slower? But then looking back at it, the movement's there. You can see the movement. It's all present and accounted for. Some of you are probably a little lost, and that's okay. But it's there. It's like it already broke down that trend and came back above, and that would have been the time that it could have made a phase B top, which it did do on, some other stocks, like we were talking about MPW, it did that. But if you look at the inversion of this and you look at it upside down and you check it out compared to this distribution model we just kind of quote unquote discovered, this is the bullish direction right here that the stock is trying to take. And therefore, like in the future, that's where it's going to go back to if it fails to make lower lows. It's just like back here, it creates a direction early on and then goes towards it, as the stock continues to drive the price onward and upward. I might be a little bit more, I don't know, it could be more aggressive with it too, because really this movement right here is ultimately the big one that you go back to more immediately. Just like in this particular example, this is where you come back to more immediately. I could be way more aggressive. I wonder if kind of answered my question before I answered it. I was thinking, like, I wonder if that line is the same here. And I think it is. It's a bit sketchy, but I like the blue one better for the consistency, but this does work kind of well as like a waveform, which makes me wonder, is this forming like a way steeper uptrend? That'd be cool, like long term. Oh man, this is such a dizzying chart now. But wouldn't the presumption be that you're gonna then like come down real low? By November 1st? I don't know about that. Why does this keep trying to type stuff? What's going on? It's like a little typing bar thing. Oh, it's just like floating on the screen. I don't know what that is. Wait a second. Wait a second. Can I do the same thing that I just did here on the big picture? I think I can. No, really? Can you do that? Yeah, I think you can. You're like, what the heck? What are you talking about, Booksy? I think in the past I'd thought about this as like a potential massive double flush, and then now I'm like staring at it and I'm thinking about what just happened. I think I largely described it as like an upward thrust, but now I'm like sitting here staring at it. It's like, is this like a macro version of the same thing right here that we're seeing on as like a, I know it's inverted, it's an inversion of AMC on the left. But is that not the same thing? Like we're defining this early motion direction that then determines where this goes if it capitulates, and it does. What the heck? That's the same thing. What? Ah! I feel like the Home Alone kid. You just put on shaving cream for the first time. What? What? What are you trying to say, Booksy? It can't be that. It can't be that. It's not that obvious because the waveform has to complete a certain way, but like I can't unsee it now, and now I'm like having to ask the question, like, did this come to pass? If this fails and goes through that ice, it is like passing through this motion right here. Like this is a weekly chart. This is obviously a weekly chart too, but like, yeah, you see this push through it, and then how it rejects, and then it finally goes back up to the top to go back for liquidity. This is for a distribution. This is an accumulation. It is different. And obviously this is like a whole range above, so it's complicated. But technically, like, it's the same. Because what's established early on, again, as like a directional move, Like, where does this go if it starts falling through? There's dozens of little trajectories, and I've found that this worked pretty well on a lot of things, right? We looked at this on MPW before. This isn't the first time. It won't be the last time either. Ooh, look at where it's at now. Oh, wow. Yeah, that works really well. You just push out here and then hold that. That's a giant inverted head and shoulder. But I digress. Point is, if you look at the top model that I was looking at earlier and you flip it upside down, that hurts my brain a little, but it's basically the exact same thing as what we're seeing here. Basically, I mean, it misses the mark right here because it goes so high. But everything else is flipping close. Y'all are like, I can't see it, Booksy. Your chart's garbage. It is a bit garbage. I can't unsee it now, and now I'm like, wait, what? How is that possible? So what this does in the beginning is there's this marker. We just did this. It's so weird because it's like, I just don't know how to describe. I wish I wasn't so mumbled about and jumbled about it. But we just described this same phenomena on IWM, and it's doing the same thing right here. Am I crazy? Maybe. I might be a bit crazy about it, but so this level are the same in some ways because they're establishing that LSPY marker that has to be broken if you drop back through it later. And then that's where a lot of the trajectories are built from. We kind of used a couple different examples. But this trajectory right here, which is used in the middle, there goes the day, I guess. This trajectory right here is used in the middle. It basically flows through the rest of it. I mean, there's different ways of kind of interpreting the same information, but yeah, I mean, that's the trajectory right there. I'm going to get rid of this orange line. I think this is a better one. It's just stronger. It's slightly different, but it's a stronger line. And then we were just looking at this on like the micro and how that's crazy. And that's like a 50% run across, isn't it? What? 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 Why is that so perfect? Wave. I get this being perfect, but how did it set up that way? Oh my gosh. Okay. What in the world, Booksy? There's only one way to test this. You got to use that line and see if it works. There's no way it's going to work. I can't believe that worked. I cannot believe that. I must be the biggest idiot in the world. So the reverse split definitely makes this questionable because it does not, we don't even know where this goes. It doesn't add up. Like if this went to the top, it'd be like way over here somewhere, right? So if it were the same, yeah, look, of course Of course it works. If it, look at where it would have been without that reverse split stuff. That 50-50 would have come right over here. So the chart is shifted. You son of a bee. Look at that. It's the same line. That represents the chart shift, I think, right here. So the break that happened, it's complex because I do think that in this case, this could have been, how did I find this one though? Is it just the inverted one? I don't know. It looks almost exactly right, but I gotta check. Hold on. Where's the end of this line? What are you doing, man? Get your stuff together, man. I can't get my stuff together. Just an idiot, hot mess of a human being. Where is, there it is, 25 degrees. It's 24 degrees. It might as well be the same. So if I take this at 44 and I go to 44, it's actually really wide, isn't it? It's right there. Ooh, it's still nice though. Not sure it has to be perfect, but they're pretty close. Pretty close. When we did it perfect on AMC on that wave for 2020, so just to be fair to ourselves, yeah, that's the same, but oh, wow. There it is. What does it mean? It means that this trajectory model, I don't know, man. You know, every time I say stuff like this, people get the wrong idea, but it legitimately is pretty groundbreaking for me in my head, because I've been talking about the fact that this was a somewhat set up move for a while, and I had these ideas about these trajectories. It's very odd to me that there's a consistent trajectory pointing towards the 72 top. I find that to be very weird, right? And like we've talked about this before, it's not that's not new. Very odd to me, right? Like it's like this supposedly like magical move that happened across the market has just an incredible amount of clear bullish direction towards it. But what I found doing all the stuff I was doing yesterday with MPW is that this appears as a top quite a bit, and it essentially maps out a future trajectory for the stock. And this happens like regardless of major catastrophic dilemma, you know, it's like it's not just because of COVID or just because of some big news. Like this is after the fact, it still sets the same thing up. This is what happened on MPW, and it happened on IWM, and it happens all over the place. You see the same model of that sign of weakness that pushes up into the top. What appears to me is that maybe, and this is all kind of speculative to some degree, but what seems to me is this is the middle wave, right? So like we already kind of knew that. That's been on the table for a little while. Like this idea that this was the M1, 1, 2, and then there's a 3, 4 somewhere in there. It's not a big deal. Flip it upside down, it just looks like year 1, year 2. We've talked about this. That matches with that LPS, that last LPS. This is the point right here, y'all, on where that divergence starts on AMC. This is the marker that I was using to do the comparison to MPW. It's right here. It's not earlier, it's right there. And so when you flip the chart back upside right, you can see that that's the 50% marker right there. That's the one that defined the move back to the upside. This is what defines the middle wave, and then look at where it meets. It meets the middle wave right there. Like it meets it, it hits that marker even when it goes down. What it means is that we should have the ability to track the trajectory moving forward. So there's a similar motion happening right now. So this is basically like identical. Another way to kind of describe this would be that this maybe took an alternate path at some point. So like, for example, if this were 1-to-1 with what we see over here, we might say that at some point it deviated, right? And we went, this definitely happened, right? We talk about this motion right here a lot, because this is that hook line that I draw all the time. You know, like the big wave, that's this guy right here. So I've already identified this as like really important. Like you should come back here later, right? If it's going to wave out. But in this case, I kind of inverted the colors, but it would have been like, let's say, for example, this had never really deviated. It doesn't have to be like this, because we know that for AMC in the past, it's not been like that at different times. Like right here, it passed beneath it and then goes back above it. You might have thought that this could do something similar. It's kind of doing it right now. So it's basically like the exact same thing. How do I just show this? I'm not a big fan of bars patterns, but I'm going to use the, no, I'm not. I'm not a fan of bars patterns. Here's why. It might be doing the same thing in a different time. This conceptually would be pretty much the same exact idea of what happened here. So on the macro, we would be essentially building out this guy. Again, that's nothing really new. Like I've talked about that before as well, that there's a precedence for something like that, but it would essentially be doing this right there. And so instead of building out where it is, which is way up high or way down low, depending on how you look at it, it's really the similar levels. You'd be building out that same concept, but doing it potentially from over here on the left. Had that reverse split maybe not happened. So if we saw something like that, what we would look at it the same way we already do, which is we always kind of have this in our minds, right? Hopefully. That's the creek cross where the M here happens, and then it goes down. And there you go. That's that motif we talk about. This has just gone really, really low. Okay. Now, I had somebody like kind of get annoyed with me and say they didn't think this was like some macro schematic, but it very well looks like one now that I've kind of connected the dots finally. It's just that the shift is so dramatically different. And this setup right here drives that theory forward, because when it's bearish and it establishes we did the same thing right here, guys. We did it this way, okay? When it's bearish and it can establish a reversal, this LSPY area, or I should say preliminary support really, or preliminary supply, excuse me, because you're going up. It's confusing because it's like backwards on this one, but it establishes where that sign of weakness might happen later, and then the rest of it is just trying to push back up. What's confusing is that this came so high that it really just looks like it broke out the other way. So like if we go to like maybe you don't like what I'm using because it's MPW, we can go to IWM. It's the same basic principle. We just looked at it earlier today. It's similar concepts, okay? Very similar concepts in that there's a initial push here. So you got like a floor, right? This area, this, maybe better to use it like this. See, this one also didn't come to a new low. So it's a bad example, I guess. But there are times where the UTAD comes higher. Like this one did. This UTAD came way higher. It was a late upthrust. I don't know. There's examples of it, but I'm not finding them right now. I'm going to have to like keep looking. This one's kind of like that too, actually. I take it back. This one right before the bigger one that happened, this one's the same exact thing because this has the same motion right here. So this goes up, forms a top, right? Drives the price through the bottom, which is like a sign of weakness, and then it goes up and really goes very high and distributes and comes back through. And probably what we see is that early on right here, this is already kind of establishing that trend. You don't have to take my word for it. You guys can go do it yourself if you want to try it out. But yeah, it's there. It's almost perfect. You can see right here, it's not perfect, but it's very close. And that should be repeated. If you got the right thing, it should be gently repeated throughout, and it is. You see that? That's like bearish direction. So there's a bearish direction kind of defined, ill-defined. This is not a great example. It's kind of ill-defined. It's okay. But there's one defined kind of early on saying, well, if it doesn't succeed here, we're going to go down, and this is distributive. Then there's a weakness, and it goes and meets that purpose. And then when you look at where it then goes later for that macro kind of bigger picture dive after the top distribution, drives the price back down and goes back to check liquidity. This is on the case of a bullish outlook, right? And then it goes the other way. Well, I don't know if this is like the best example to use overall, right? You could make an argument that, well, that could happen here and it could just keep going down because you're talking about the same thing right here. Yeah, technically that's true. What is supported by this is two concepts. One is that locally, though it doesn't have to be the case, you could come all the way back to the bottom because it definitely seems supported. The idea seems fairly supported that, yeah, if this has happened here, that before it goes back up again, it could go all the way back to the bottom and then go back up again. It may seem like that's the end all be all, like, oh no, it's going to die. But it really depends on a lot of things, and one of them is what happens after that. And like, for example, right here, this turns around, okay? So these are examples of one in which you get this initial drawdown because it fails to go forward, but then it continues to advance, and the same thing happens here. And what matters about it is that trajectory that's built out, bearish and bullish. And I don't know exactly where it is. I think it's right here. See that? And see, then when it reacts, it goes back towards that major reaction where that bullish pattern is set up. But you got to like find it, okay? I did all this earlier, but what I didn't think about was, could you do the same thing for, you know, like an AMC or something? I didn't really think that was a, I don't know, like a reasonable thing. It seemed a little bit silly. But I definitely think it's making sense because when I flip the chart around, that's what I'm seeing, right? So this does make me think that it's very possible, even if this long term ends up being bearish, it's very possible it's going to obey some of these initial setups, which would be very bullish for us, right? Like it would be. So I'm using this as like a comparison. But there's more than one comparison to be made. Like it's not just one thing. Makes it a little tricky, sure, but so what I'm thinking is, based on the way this is set up, this would have been like the original brackets would have been here. And I can't do it because this chart is screwed up when you use bars patterns, but this is kind of like an offset version of the same thing. So what we're seeing is we're kind of seeing like all of this stuff it could be happening if we didn't have that split perhaps off of this bottom, which wouldn't be 10, it would have been like 2, which is still kind of what's happening. It's like it displaced it, you know? And I've talked about this before because I thought that probably happened, but it's hard to prove something like that because it's like theoretically, it's just mathematically, it's just kind of tricky, you know, like to be like, oh, Well, there was a split, so it just displaced it. When it just looks like it's diving below the floor. But I think I was right. I'm starting to think that that could have been very simply, because it's a 50-50. It's like perfect. And that's exactly where they brought it to. So they purposely displaced it beneath that. I have no idea. Maybe there's like a 10x value or something that matters. But now I'm like, wonder if that would, in the same situation over here, where would it have been? And I think it would have been in like the same spot. Or roughly, like right around the same zone. Yeah, see? Look. Look at the distance traveled. Dang. Look at the distance traveled on this marker here. Let's just make it like green so you can see it. Check this out. See that distance traveled from the blue line to the gap? That came from this marker right here. Like the full length of that move. This would have been like a gap fill move had it been in the right spot. I mean, it's right on it. Right on the nose. I mean, technically, I guess it could have been a gap. It could have already filled because this would have filled it maybe. But it would have been really close. This is strange stuff, guys. So what you're saying, Booksy, is... I don't know. I'm saying that it's almost like... Man, how do you do this? I guess you just look for the same displacement value here to here. You're probably thinking to yourself, this doesn't matter that much, you're just wasting time. But I think it might matter a lot, because it could determine if there's a shift that occurred. Ooh, and that's where that Judge Zern upthrust thing happened. They define the shift right here. That's the shift value right there. Mathematically, that must have mattered to somebody. What? It's chaos. Some of you guys are like, I don't give a crap, Booksy. This is a waste of time. I don't think so. So, had this followed through, perhaps, I think it wouldn't have come back up necessarily. It could have made a new low. I don't think the argument is that it couldn't have made a new low. I think it would have. I think it would have come below just a bit and made like a spring. But the resulting action would then be potentially like greatly in our favor. And it would come back to the ice. $27.27. Yeah, it would come back to the ice level, and then if it breaks out, it would go all the way. So what that means is that your expectation here, if I'm right, and I don't know what happens perfectly right here. I think this could potentially stop at 291. That's possible. Potentially, that could be like the stopping point. It doesn't have to go like we're seeing here. It doesn't have to go. It just needs to move over that creek. And it would. So 291 is sufficient. It doesn't need to go low, but it could, if it hooks here, go down and make a new low, because that's not out of the rules. And there's a red line that was kind of used here to define that. And we did a pretty decent job of picking it out, but there was a couple of them. And it's possible. Yeah, I mean, there's a couple different ones. We just did this a couple minutes ago. I deleted the chart, but why'd you do that? Because I'm dumb. I don't know. I just did it. Because it was getting really messy. So there's one that's kind of low, like right here. That one worked pretty well. And that one aims for like the 291. And then there's another one which was a bit higher right here, and that aims for that other one. Both of those are fine. It doesn't really make a huge difference, because when it reacts, then all that has to happen is it has to go back through the ice level. If it goes through the ice level, which for us isn't really the ice, because we're in upside down land right now. Actually, 31. It should be. It's kind of confusing. It's kind of far, isn't it? 572. Well, it has to be the inversion of that, though. What are these? 32? Oh, wow. No, that's the same. Oh, yeah. That clicks then. If it comes through the ice, dang it. It's like 50-50, isn't it? From one to the next to the next. It's not really ice. I mean, a better way to describe it would be that cross trend that is, in our case, above us. It's not really ice. It's more of a creek. It's like an invisible creek, because you wouldn't see it. It only has like one point on it. See that? Ooh. Oof. That's really nice. And it takes you back to the other one. And then what's crazy is that this should then point towards this guy, which would be a higher push. So you would come back through here. Again, it doesn't really make a huge difference when that happens. I mean, it's a minor difference. So I bet if this doesn't go, it just loses itself right there instead. Holy cow. 2250. It could be faster than that. If it's like the first squeeze, it would be like really fast. 2380. Yeah, so this becomes like a sort of a copy paste of what happened before, because you'd have like a bleed down. So you'd have like a 50% marker maybe here around $7 or $8, which you kind of already knew. We skip 13 because you don't have to go up and then back down if you just go down. So if it doesn't just go straight down, or if it does just go down from here and doesn't make the phase B top, it could make the phase B top. I gotta warn you about that, because it's very possible it goes up and then comes back down. It would just be very unusual at this point. in the game. Because the more I'm staring at it, the more I'm thinking like it doesn't really add up anymore. Kind of missed it and it didn't take the opportunity. Now it looks like it's going to try to push as far as it can. It just needs to get to, it could get to the gap fill, be enough, is what I was trying to say, the 291. And then there's a shift that happened. This shift, this gives you a 50-50 around those quote-unquote ice levels. They're not really ice levels. It takes you back all the way up to 2348. But that's not the end of it, because if that happens, it could fail. But what's more likely is that you're going to get a rehash to some degree of what happened in January. And I know it's kind of a copy-paste repeat, but it really is like that simple in some ways. Because if this advances and it can break here, look at where that trend is. Totally makes sense if this can manage to get the second push, that it's just doing the same thing it did here with these levels. And then you're going to move down to the next one. It doesn't have to be a 50-50, although I guess it could be. But there it is. I don't know where you would mark the 50%. I did it on the other one kind of right on the money. That's $100. See, that takes you back to the original starting level. I hate that this just kind of confirmed the same thing, but it really is quite interesting. And it does look like, again, like it's sort of confirming it that it's going to go up into February. You guys are like, you suck, man. You just found the same thing. Yeah, but it's a completely different way of looking at the same information. And I think that's really important because you're using like what you can. I think this is the part that might give me the most concern, but I don't necessarily think it's a bad thing, is it probably would get there like in the fall of 2025. And then what it's doing is it's checking that top. So this is exactly like what happens. Yeah. Weird, huh? Yeah, you're going back to check that supply. Then what? I guess you come back down, because I don't necessarily think you would run there. I mean, you could. This is probably what a lot of people are looking at, thinking that it's going to run if it has to come here, but I don't think that's inevitable, because you could potentially have it be bearish. That gives you almost like a guaranteed position, though. Like, I think that's correct. I really genuinely do. And this we found before, but it's like really close. I wonder. $60 to $80 to $100, it sounds right, and that's correct. I think it's going to go up there. This is just right along with, I mean, it's like pretty much spot on with what we did before, but I did it as a way of interpreting it as like an inverted distribution almost. Unfortunately, from that point forward, I think you have to make like a separate case, and I don't know exactly how you would do it, but I think you have to make like a separate case that this should come back again, and I don't think it's an easy one to make. Because once this advancement happens, if it can't breach, it's complicated, but it doesn't have to go lower if that's not part of the demand. It's already checked it earlier. I will say this though, is like from the greater get-go, it seems to me like that could potentially go way higher. I've always said that. I just didn't know if it would. There's no way. The thing is like it shifted the value. Like the value shifted, so they're not going to obey the same markers anymore. I don't think a 50-50 is appropriate either. That could be the end of it, like right there. Like technically that could be it. I need to change the color on these because I'm getting a little confused. These green ones, I'm making them like a lighter green. They're kind of important to separate from the others because they're the shifted values. So I think, here's what I'm thinking, is that any kind of reactionary move won't go to what the chart says now. It'll go to like the shifted value, I think. Yeah. So let's do it this way instead. Let's take a look at, since we know it's a channel, let's make a channel for it. And I'll shift the channel down, because that way it's consistent and I don't have to copy paste a bunch of stuff. Oh, if I find the channel tool, I always like lose these things, probably up here. All right, good enough. And then we're going to shift this down to meet that bottom. And yeah, that works. Or should it be the bottom? I don't know. I guess one of the questions is, did they anchor it when it broke down? Do you think they anchored it around the 50%? They may have. In which case, maybe that does indicate where the bottom ends up being, you know? Where's that gap value? I always forget where that is. Yeah, it's right there. So on the reverse split day, August 24th. It wasn't in the middle though. That's not right. Opened at 1631. But that's not like the middle either. 1970-ish? Whatever. I'm just going to eyeball it. Let's see where that puts us. Jeez Louise. Yeah, there it is. Son of a biscuit, man. I think they shifted the chart down and now they're using that as like a 50% retracement. You look at where that is. It's right there at the same mark. So I turned it around because I was looking at that in terms of like, where would it go back to? And it's easy to see like, oh, it stops here or something because that's where that was, but that's not where it is anymore. That was the bottom. The bottom shifted down. The middle is actually right up here. It's at 102. I mean, it looks really, really, really right to me. And I say that not lightly. So that's like a 50% retracement of this push down, even though it's not 50%. Does that make sense? You guys are like, nope. It's a shifted 50% retracement. It's like you took the 50% retracement and shifted it down. It no longer gets back to 50%. Now it gets back to that value, which just so happens to coincide with everything else we've talked about, which is great. And it also probably reflects that shift value that we've talked about before as well here in the trend, which again, that's great. You know, practically speaking, what does that mean? It just takes it to another level. Like, look at that. Look at right where it's at, man. It's right where it needs to be. Like, that's the 50% marker. And we've talked about this before, but it's like the same, basically the same setup. I mean, it's incredibly accurate. So the shift down seems off, but it doesn't actually not work. It works. I feel like the algorithms that be made it work. This is the target box. Now, the reason I did that in that way was because I was looking at this and I was trying to see like helicopter view. If you went backwards, I mean, it's clean, clean, clean. If you went backwards, where would you expect to go if this didn't hold? I kind of think that if this doesn't hold, much like these that are driving the ice the other way, you probably would suggest that it can come back down to this value or this value. Well, I would have said this value. Sorry. I would have said this one, which is the top, which is like, hey, you're now defining a new trend. Because like in theory, had this never shifted, guys, and this had like come back up, I wouldn't be talking like this. I would be saying like, probably this comes back to at least, you know, here, which is the middle. Correct? Well, guess what? The middle's not up here, it's here. We would have said $100 back then. That would have been higher than 72. So it makes sense because we're talking about just taking this value right here, essentially, and just shifting it, right? Shifting it to back where it was. So had this not broken, it would have come back up to basically the middle. From that point forward, you're now looking at that as, oh, it's making a higher high. Is it an SOS? Guess what? If it's an SOS, a couple things can happen. You could have an SOS that just kind of continues, right? And if it were to continue, I would have been looking in the past, weird as it might sound, and maybe it doesn't work perfectly well based on what I'm drawing. It's kind of awkward. Actually, that would have been part of the SOS, so timing is a little off here. It would have been like this, something like that. I probably would have suggested that this would go all the way back to this, which is insanely high. I know. I get it. But that's what I would have suggested because it from a channel perspective, like it would probably do that. It would break out, so on and so forth. Maybe it doesn't go that high, but whatever. When you move the chart down in the shift values, that doesn't really matter anymore because you're like, well, I wouldn't do that, right? It couldn't do that. No, not particularly, because it would have to go to the shifted value, which is not there anymore. So you would use that same principled idea, and you'd say, oh, it could come up to like 2,000, which is ridiculous, right? Everybody knows that's ridiculous. No one's going to sit here and say that's not ridiculous. But that's the value that presumptively it could go to. And it's basically like a 50-50 swing around value, right, from that middle if it breaks that creek. Again, big if, right? But there's something else that could happen that would not be in line with that at all. Because technically at this point, as you all know, you've already made the hook. We've seen this before where this distributes and it comes back down. What's interesting, though, is that it doesn't look like an SOS, but if you shift the value, like we were just talking about, had this been in the same spot that it was, it would have been an SOS, which is really weird because it's like it could have been an SOS, because you really have a very similar argument that could be made that was actually, if that value hadn't shifted and it stayed where it was and that was a spring, this pushed the resistance. If this came back up again, yeah, it could be an SOS. It's very possible. So what they've done is they've shifted the value to a place where, sure, like $100 then would have been here. That could have been an SOS. It could have just been a distribution. We don't know. But had it continued, it would have gone significantly higher, you know, so on and so forth. There's another option that could happen, which is like if it had broken out again more regularly and this chart had never shifted down, you can see that this move right here, this initial push up right here, instead of it being way down here around $15, it would have been way up here around $15. But that $15 used to be right up here underneath this August run, right? And we would have had it basically right there as a breakout, potentially. And then you would have run up to like 100. And that could be where you distribute. All the same, shifting this down, it could have come down. But the crazy thing about it is there could have been an SOS with a backup. And if that was healthy, it would have come back down to check this creek here. It would have come back down to this LSPY pocket, which is like the center of the wave. And this is interesting because then if it comes back up again, you potentially just go. The reason that that's fascinating is because I guess on my limited scope of ability, I've kind of used, and it's that line. There it is. There's the line. Like it would go back to test that and then potentially break out again if the shift is correct. And then it could go up to like now, like what appears to us to be retesting all-time highs back at 562. So it's not that it goes, oh yeah, so like the backup itself, I see. I mean, that's plenty high. 562 is ridiculously high still. That's assuming that long term it doesn't like crap out or whatever, and that it holds up here. It would come back down first to like 15 or 14. It'd have to come all the way back to check a creek jump. And if you look at it like just really simply, not squint your eyes or anything, just kind of basics, it really looks reasonable, because if you're looking at it now with the way the chart is set up, this is the initial move that could break down. It doesn't have to go further, but look at the reactionary move here back up. It's really just a retracement to go check that level that we jumped off of at 13 here and potentially check that creek, right, that we took off from. If this pushed higher, it would have elevated that creek a little bit, you know, right here. You're probably going to look at that later and say, yeah, it came back there. But it's also like a parallel too. So the structure of it makes perfect sense, you know, as just a shift of the original kind of setup in theory. And then this becomes like a 50-50 kind of, so you test the liquidity on the trend. And if it holds, then you can drive the price back. It really just looks like a gigantic M-cross setup. And then it goes all the way to like 573, which is starting to now look like this trend completed. Yeah. It changed the outlook of AMC because of the shift, and I think that it's not wise to ignore that. But I think it would be important to also suggest that if that were to happen in the middle, that I think it would continue that far, and it makes sense. It adds up. It's the right shift value. So instead of using the original values way up here, which are just astronomically too high, because they just are, this actually works. And it actually makes more sense because of the shift that happened on that channel from here originally, where all that would have been set up here on the bottom to, and potentially at that point, maybe this was like 300, you know, to being something over here. It's really like right there. That's complicated, but yeah, I think that's right. And what's even weirder is that this doesn't ever break out of like the middle. That's the other strange thing. Is like it never goes to the top of the trend. It just kind of stays in the middle. You can see if it did come out here eventually, it would be like maybe it's 500s or something. That's fine. But like, isn't that crazy? That's more like 2029 kind of stuff, like way out there. I'm not willing to like say anything else about that right now. You really no idea how long a backup could take. I would assume 2029 based on certain things, but yeah. Basically coming back here later to like 500s. And all that really is a huge widening, which, makes it easy to visually see it, but the shift value itself is what I was concerned about. And I find that to be kind of compelling. Somewhere in this region up here. And that actually is just slightly above all-time highs. It makes perfect sense to me because when we originally took off here and I was getting early targets, aside from doing like fib extensions, I couldn't find targets that were like ridiculous high. I found targets that were about 100% higher or thereabouts, like not a huge percentage wise higher than this, and they were big moves, but they weren't like significantly humongous markups. Because if you look at the original markup value, it's not that high. Like it only moves that far off the old all-time highs. So some of the early stuff that I found was like similar. It was like marking it up. That looks like a 50%, but it was like marking it up basically the same amount, like early on. It's complicated, but maybe that works. Maybe that works out in the end. There's no way of knowing, by the way, timing-wise, when that could happen. I just don't think there is. If this M cross is successful, then you'd have to see it build out. But with all reason included, like a backup even here could last really, really, really long time. I mean, you could be talking about waiting until 2029 just for the move. And I mean, yeah, if we were sitting at like $80 or something, people would be like, whoa, it's still good, But it'd be hard to see a lot of people holding through all that and waiting that whole time. So there's really no telling, long term. I think what matters to me is this early short-term move is very compelling. And even if that fails, and it can, it represents like a double top, basically, on the original run. So why that's significant is kind of obvious, because if that double top is unsuccessful, then you could sell back down and kind of continue as you were, not necessarily always to the downside, but sure, you saw this break down another level, then you can kind of start looking at this as layers of the same thing going on again to the downside. So I think it's a really interesting chart, a really compelling and interesting chart. I think there's a new level of confidence that I have after doing that inverted setup that just kind of blew my mind, especially this little bit right here. This is this is like a sign of weakness, basically inverted, potentially. So what you're saying, Booksy, is you're bullish. I'm saying that even if we don't see 13, which is possible, we may not see 13 first, after all. It's the first time I've said that for a long time. So if you're wondering, like, what flipped? Not much. Just, I think that I thought it was imperative to get that phase B top and get the secondary distribution to go low. I think my question was like, do they need to go back up to come back down? And I think the answer is maybe, but it's not certain. Like, I don't think there's a definite answer there. And I think that there's a possibility, given where we are, we're sitting at like 418 right now. There's a possibility, given where we are, that we could just do a big slide into earnings and get that gap fill. And technically, I think it could be enough. I don't know if we need to go back down, but we could see a repeat of what happened in 2020 from there. It's frustrating, but MPW is really the main reason why I'm thinking that that's possible, because it did take the path that we didn't take. The other option is that it's a long-winded range that lasts a little bit longer and goes into like May instead. So volume is dry. If they wanted to take it down, they would have already, in my opinion. That just surefies the other comment, which is like sometimes if you don't have the liquidity to drive the price low, you drive it up for an upthrust. That's exactly what I was saying a minute ago. So like the idea of going to 13 and then going low was that you're pulling sellers back in. They already did this same motif in 2020, and we talked about that secondary upthrust, but we skipped it. It did happen. I don't think I was wrong. I mean, yeah, it could be delayed here. Maybe it's used with this earnings bit instead, and then it dumps. But I saw it on MPW happen, and it happened like religiously, like right where it was supposed to. And it's the same timing as AMC, but AMC didn't take the jump on the 13th. So that was part of the reason why I got into this yesterday and then talked about it a lot today. It just didn't do it. So it makes me wonder if it has to do it. When I went through the process of flipping the chart and doing all these like comparisons, I don't think it has to do it. I don't think that it needs a whole lot. It would have to be negative news or something, but I don't think it needs to go that low. I think originally I thought maybe it'd have to come back to the bottom, but I don't think it does anymore. I didn't think it had to. I thought they might do that if they flush it. But if they don't want to flush it, they probably could get away with just a gap fill, in my opinion. I think they can do it. I think it's set up to where right now it's designed to kind of try to get you back to that point, but they're having some difficulty. That's why I'm wondering if we take it up and then come back still. That's a question mark. I have a lot of different ideas about maybe where AMC goes in the weeks to come. I don't want it to sound like I only have one thought and that's it. I mean, we talked about this as a possible problematic area. If this breaks, this is a big trend, guys. If this one breaks, that could be like the reason that maybe it drops. This trend goes back to all the way back to April through May. So if this trend drops, that could be the catalyst for that low drop, for example. And I don't know, maybe it needs to go up first. Maybe we see that push up again into earnings. We could see it come up and then potentially sell off low at like 530s and then dump. You know, it's kind of bizarre because I think the expectation was it was already going to set up that way higher, but it just didn't take that path. It just avoided it altogether. Part of me wonders if the constant selling year would reduce the amount of selling later, and I think it might, but it's in the pocket right now. I mean, it's sitting on the golden pocket right now. It's got potential, but I don't see how a failure here is good for us. It can have to be distributive. So an effort to try to drive the price lower, right? And we'll see. And I don't think it's out of the question that it could run up into November and have a big rally and then come crashing down. That's what happened in 2020, right? And it didn't follow the rest of the market. So, well, I said I was going to stop like 2 hours ago, and I didn't stop. I am going to stop now. Pretty winded. Lots has happened on AMC with the breakdown today, but it is what it is. I mean, we were warning you this morning about that you didn't want to see it kind of drop that level, and it dropped. So, unfortunately, it is what it is. It has to recover, come back up above 420s, 424 at least, and then it would have to probably just continue back above 440. At this point, it looks worse than better. It's sitting on that trend. I think that's important. You know, it had an early kind of dip through it. So I think that was a little bit of a weakness just to test it. So they may try to like dip back down and go back to the 4s. If they break it, that could be the momentum they needed. I'm not positive that's going to happen. So right now I just see it as an M cross that's holding, and then we're going to wait and see if it can hold here. And if it can, then we're good. But push back out. I mean, it can easily recover from this if it drives the price back up over certain numbers, and holds it. It's not that far away. I question whether the operator wants to do that or whether they want to go ahead and try to take it low. So, anywho, flushes, flushes, flushes. That's the name of the game right now. Sorry about the long-winded day, but man, what the heck. Found a lot of interesting stuff today. So, yeah, I wonder. IWM, I kind of just wonder if it's going to just bleed down. I'm feeling really good. It's an odd day because it's very red, but I feel really good about the next year. You guys are like, what? I don't know. I feel really good about going into January right now with the setups we have. Wish I had more money, I guess, to put on stuff, but whatever. All right, guys. Goodbye. I'll talk to you later. Have a good one. I got to go.